Welcome back to the European Market Open. A minute to go until the start of cash equity trading. Here are your headlines. EU leaders vow sanctions on Belarus for the diversion of a Ryanair jet. Ursula von der Leyen labels it an attack on democracy. Global stocks push higher as Fed officials stick to the script on inflation. They say price pressures will be transitory, not lasting. And Elon Musk's push to boost Bitcoin's green credentials spurs another rally in the cryptocurrency. Let's take a look at these futures then. 20 seconds or so until the start of the European equity cash session. And futures pointing to the upside. Bear in mind, of course, that Germany was closed yesterday, so it has some catch-up to play. Having said that, Europe made gains yesterday. So interesting to see that Germany is expected to underperform. And we have some M&A to talk about in the real estate market in Germany. But despite all of that, Germany perhaps will underperform. Elsewhere, we see expectations of some gains. Euro Stoxx 50 futures up by 0.25%. US futures also pointing higher as we get this European equity market session underway. So the UK, the FTSE 100 up by 0.1% as we wait for these other markets around Europe to open. I mentioned the US futures point higher. We had a strong session on Wall Street for tech stocks yesterday, up by 1.4%, more than that on the NASDAQ as tech stocks rallied in Monday's session. We could have further to run on that theme, though, despite the rotation that we've talked about a lot away from technology and into more value plays. We do see the NASDAQ coming back with another hurrah, up by 0.7% on US futures for the NASDAQ. E-mini futures up by 0.4%. So with that slight diversion into US equity market futures, back to European stocks, which are just opening up, and up is the word. CAC 40 up by 0.1%, the IBEX up by 0.2%, waiting for that German market to open after it was closed yesterday. All in all, making some modest gains then across these European equity markets, focusing really on the growth story, focusing on expectations that inflation maybe won't derail things. That's certainly been the Fed mantra, and maybe that line of argument is sticking a little bit, or at least persuading people that interest rates won't be rising in a hurry. So European equity markets then opening positive, up by, as I say, 0.25%. Meanwhile, the dollar fell against most of its G10 peers after Treasury yields slipped, and weak US data supported comments from Fed officials that the spike in inflation would likely be short-lived. Joining us now to think about FX moves, Jeremy Stretch, CIBC head of G10 FX strategy. Jeremy, really good to speak to you. Thanks for joining us. And I suppose
good morning.
We are seeing a little more appetite for risk assets, more appetite for equities, and going along with that, we would expect to see a little bit of dollar weakness, and we see that this morning. What for you is in the driving seat when it comes to that dollar weakness today?
Well, you're absolutely right. We are seeing the dollar under some degree of pressure, and I think you've identified a couple of the key themes. I think one is the decline in US yields in terms of nominal, so we're back trading through 160 in US 10s, and that could easily extend towards another a beep or two lower, so maybe back towards sort of 158 in 10s. But at the same time, we're seeing some of those US break-evens pushing higher, so that's impacting US real yields. And that is causing some concern in terms of the US dollar's valuation. So those real yields are, I think, keeping the dollar very much on the back foot. And then you overlay that with some of that sort of recovery play, that when the recovery narrative that we're seeing, and that plays into the euro, which is likely to benefit from an uptick in the IFO this morning. And it's also playing into sterling, which benefits from risk being positive territory, but also in terms of the context of the rebound of the consumer sector. So it seems to be the case that US real yields declining are weighing on the dollar, and there are good reasons to look at some of those European currencies which are gaining as the macro backdrop improves.
And if this is all coming from this US real yield signal that you talk about there, Jeremy, what do we expect to see on break-evens, inflation expectations out 5, 10 years? What are you expecting that to look like as we continue to hear this dovish messaging coming through from the Fed?
Yes, that's right. And I think it's quite interesting because if you actually look at those US break-evens, and obviously inevitably you would normally look at either 5s or 10s, but if you look at 2s, they are substantially higher than those longer-term inflation expectations. So that validates to an extent some of that Fed narrative about inflationary pressures proving to be transitory. But I think as we continue to see data suggesting that those price influences are remaining very robust, so pretty much all of the survey data looking at the prices paid components, all of those are moving higher. And when we start to look at those question marks about wage growth, or at least the difficulties that we're seeing in terms of filling vacancies in the US in particular, which could cause wage pressures, then for now at least it still feels as though the path of least resistance is those US break-evens continuing to...
Good morning, traders. I'm going to trace stop and profit for Japanese yen. As you can see, we pulled it from last week at 108.680. I'm going to place a stop and profit to 108.660. Okay, so if you sold short last week Japanese yen, it's time to place stop and profit. Okay.
Well, of course, the difficulty in the US labor market is this question mark as to whether there is this ongoing reluctance to return to the labor force and whether that is going to necessitate a significant uptick in wages, or as support mechanisms gradually eradicate and the as the education sector comes back on stream, allowing more normal childcare patterns, that will allow workers to come back into the labor force without the necessity of a significant uptick in wages. So there are some real challenges in terms of trying to understand the employment wage dynamic as we move forward. And I think that is going to be an important issue for the Fed to consider. But for now, at least, it does feel as though wage pressures are going to be ensuing. Now, the question is that going to completely de-anchor inflation expectations over time? The Fed, of course, are still assuming that that will not be the case. But as the evidence continues to point in the opposite direction, that narrative from the Fed will continue to be challenged as we move through the summer.
Jeremy, thank you very much. Stay with us. Jeremy Stretch, CIBC Head of G10 FX Strategy. We've certainly talked a lot about the dollar. We'll get into some of his other thoughts in the next part of the program. Also worth mentioning what's going on the German real estate sector. Vonovia upending the German apartment market with a $23 billion deal for Deutsche Wohnen. We heard about that yesterday. Today, the first time for these stocks to react. You see that Deutsche Wohnen is on the rise, quite substantially, up by 15.8%. Vonovia moving in the opposite direction as the acquirer. Coming up on this program, EU leaders vow broad sanctions against Belarus after calling the forced plane landing an attack on democracy. We're live in Brussels next with all of the latest developments. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Welcome back to the European Market Open. Just coming up to 10 minutes into our European trading session. European equity markets moving to the upside. I keep mentioning that the DAX was closed yesterday, and we see a little bit of catch up there. As you can see, up by 0.75%, much more than futures had maybe suggested. I should also have mentioned, of course, the Swiss market was closed yesterday, and now we see the SMI index rising to a record high, up by 0.4% or so. The DAX not all that far from record highs as well. Let's get a look at some of the individual stocks that are on the move. Bloomberg's Danny Berger joins us with some of those. Danny.
And starting with an earnings one here, Aviva, the engineering company, higher today, one of the biggest gainers. They were able to beat on their earnings, also raising its final dividend as well. So we're seeing those shares up more than 4%. But that's nothing compared to the move that we're seeing in Deutsche Wohnen. Of course, this is one of the biggest deals in European real estate. So those shares moving higher. It's being bought by Vonovia. Those shares are lower. Of course, we usually see that with the acquirer, lower by about 4% or so. This is a $16 billion deal. Now, finally, I brought up Argo Blockchain. It's a pretty small company listed in London, about 500 million market cap or so. However, it is joining this Bitcoin mining council. Because of that, shares are moving higher. This, of course, the council talked about by Elon Musk to promote energy transparency. So interesting that Elon Musk not only moving Bitcoin, but companies related. Now, finally, for the macro view, we do have that offshore yuan breaking below the 6.4 level. Of course, as Mark was pointing out earlier, we want to see if that onshore yuan can do the same thing. Of course, a couple factors here. You have the weaker dollar. You have the messaging from China, or rather perhaps mixed messaging on whether they'll support that appreciating yuan and capital inflows. But throughout the rest of the market, when it comes to the rise in U.S. tech futures and the U.S. 10-year yield, it definitely is that transitory inflation that seems to be the sticking narrative for today, Anna.
Yeah, absolutely. Danny, thanks very much. Danny Berger with us on what is a fairly buoyant equity market picture globally. Let's get back to the geopolitics, though, because following that summit that was taking place just yesterday in Brussels, EU leaders have kicked off the process of further sanctions, economic sanctions, that is, against Belarus. That's after it forced a plane to land in Minsk and arrested a journalist and his partner on board. For more on this, Bloomberg's Maria Tadeo joins us now. And Maria, what does the package of measures look like then? European leaders met and quite quickly came to this conclusion about the measures they wanted to introduce. So talk us through what has been decided.
Yes, Anna, and in fact, that's a very good point, because this package of measures against Belarus and the Belarusian government was agreed in a very quick manner. That was something that European officials behind the scenes told us, that there was no disagreement or bickering among the EU 27 on this point, that there was a real united front. And when you look at the details, well, it's going two ways. One clearly is targeting the airspace that would essentially block flights in and out of Belarus. We're already seeing European measures and European governments taking that that kind of action today, restricting flights into the country, but they're also going after people, individuals, and companies, especially the state-owned companies in Belarus that the European Union claims are supporting and financing the Lukashenko regime. So on the one hand, you have the airspace, and on the other, the money. So it is a combination that some of the analysts that I've been speaking to this morning actually say is tough and is on the upper range of what European leaders could do and had, time to do in such a quick manner yesterday in the European Council.
And it's interesting, I note with interest that Ukraine has halted air traffic with Belarus from May the 26th. This according to a couple of agencies in Russia reporting this. So it's not just EU countries that are following this lead, others as well. European leaders also discussed Russia then, I understand. How are diplomatic relations there?
Yes, Anna, and it's interesting that during that meeting, European leaders were not able to use their phones. They were not able to take any electronic devices into the room. So it was full confidential. It was a request made by the head of the European Council. So it does show you that to some extent there were concerns perhaps about some information, some of the discussions leaking or potentially being hacked. Now, on Russia, we did hear from the head of the European Commission, Ursula von der Leyen, with some very tough language, Anna. She talked about a country that is escalating its behavior, that is really now trying or really actively trying to destabilize countries in Eastern Europe. She said clearly it's meddling in elections, it's carrying out cyber attacks, and in some cases also assassinations. That was a word pronounced by the head of the Commission. She did say, however, that Russia at this stage is too big to ignore. It is geographically very close to Europe, and therefore European leaders need to find a way to engage, but also be ready to take more actions in June if there isn't a change in behavior from Russia.
Maria, thanks very much. Maria Tadeo joining us there in Brussels with the latest on that EU Leaders Summit. And of course, they had day one. They made those quick decisions around Belarus, but they'll be back for more today. Let's get back to the market action. Jeremy Stretch, CIBC head of G10FX strategy, is still with us. And thinking of G10FX, I want to ask you about the euro. You referenced it a little in what we were saying about the weak dollar earlier on, Jeremy. But how much do you see how important do you think the June meeting is going to be from the ECB? A guest earlier told us about the communications challenge that lies ahead. If they want to flag that they're going to reduce the amount of of what they're doing in the PEP program, but at the same time they don't want to make it look like they're tightening policy, that could be quite a tricky tightrope to walk. What will you be watching for?
You're absolutely right. I think it is going to be a very difficult balancing act, and I think it's going to be interesting to see how the doves and the hawks actually play this going into the meeting, because, of course, I think the subtext is that a meeting which comes with revisions to the staff forecast, but those staff forecasts are seemingly going to be revised up substantially, does make that communications challenge a difficult one for the ECB. I think they will want to make sure, and they want to flag that they are prepared to maintain the bias towards preserving favourable financial conditions, don't want monetary conditions to tighten unduly. But I think the inexorable balancing act is going to result in a continued grinding higher in terms of those German bund yields, and that obviously has an impact in terms of nominal spreads. And I think that is going to be the narrative that I think will keep the euro relatively well supported. But the ECB will have that ensuing balancing act to try and preclude an overt degree of strengthening in the euro, which could start to compromise the recovery trade that we're anticipating through the second half of this year.
And Jeremy, when I look at moving on to another European currency, thinking about the pound, when I look at what the conversation revolves around, that of inflation, I wonder how different is the inflation conversation in the UK versus the US? Because the top line, Bank of England, plays down the risk of runaway UK inflation. It's the same sort of dovish messaging that we're hearing from the Fed. Compare and contrast the two for us.
Well, you're absolutely right. I think there are some similarities, and I think in the context of the wages debate that we were having a little bit earlier about the US, I think that could also be relevant to the UK, because we are seeing a significant uptick in vacancies, and certainly some of the weekend press reports are underlining difficulties that certain employers were having in terms of recruiting staff because of various structural factors. So I think there are some similarities in terms of those inflation dynamics. But of course, it is very much the case that the Bank of England under Governor Bailey and the bulk of the MPC, and including those that appeared other than Haldane at the Treasury Select Committee yesterday, are also playing into that central bank orthodoxy of namely suggesting that inflationary pressures will prove transitory. Now, that still will probably probably play out in the context of the UK, but inflation is on a much higher plane in the UK relative to most other developed markets. So the bank, I think, have to be mindful of that. But nevertheless, the Bank of England have shown a tendency historically to be able to look through spikes in inflation. And I suspect that's what they will continue to do this time around. But the narrative in terms of the consumer rebound, and we'll see that in the CBI Distributed Trade Survey dated today, does validate that sterling still has some potential upside, irrespective of some of those inflationary concerns.
Another thing the Bank of England was asked about yesterday, and I'm thinking here about Governor Bailey in particular, and went on to talk about, is cryptocurrencies. Governor Bailey describing crypto as dangerous and drawing enthusiasm, so he's skeptical about it. It has currency in the name, so I'll ask you about it, Jeremy. Your thoughts on where we've got to in the crypto narrative, because there's been a lot of volatility that's focused a lot of attention on it. There's a lot of retail exposure, which means that regulators are going to be watching this perhaps a little more closely.
You're absolutely right, but in the context of Governor Bailey, you took the words right out of my mouth, because the word skeptic, I think, very much describes his presumption of that particular market. I think the obvious dynamic in the market space is the degree of leverage and also the degree of retail involvement, and I think that does underline that there is inevitable uncertainties when we do see big price movements, and we saw that in the context of last week, for example, when we saw that significant price drop, and we saw some discussion about margin calls. So I think there is going to be this increasing focus from the regulators in terms of the dynamics, not least of which, because of course there are concerns about the rather less pleasant dynamics of the cryptocurrencies in terms of perceptions of money laundering, etc. But I think it's the degree of leverage in the retail sector involvement which can create instability when we do see significant price moves that will continue to keep a close eye from the regulatory environment in terms of that broader perspective.
Yeah, Jeremy, thanks very much. Jeremy Stretch, CIBC head of G10 FX strategy. Jeremy will be continuing his conversation with us on Bloomberg. That's on Bloomberg Radio at 9 a.m. UK time. So I look forward to catching up with him again there. Coming up on this program, from one of the most prominent investment banks in the world to a decade spent as the sick man of European finance, we chart Deutsche Bank's fall from grace and its impressive turnaround in our Big Take. That's coming up next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 8:22 here in London, 9:22 in Paris or Berlin, and in Frankfurt, which is where we'll head to in terms of our themes next. You can see European equity markets making decent gains, certainly in the case of the German market, which is catching up after yesterday's closure. Now, thinking of Frankfurt, Deutsche Bank's AGM is this Thursday, where CEO Christian Sewing is expected to highlight the turnaround at Germany's largest lender. It's a far cry from the shareholder angst that Sewing faced 2 years ago as the bank remained shackled with the sick man of Europe finance tag. We've taken a deep dive into the recent changes at Deutsche in today's Big Take story on the Bloomberg terminal and on the Bloomberg website. For more, let's talk to Bloomberg's banks reporter Stephen Ahrens, who joins us now. And Stephen, how did Sewing turn Deutsche Bank around then? The big picture for us.
Yeah, hi, thanks. I think one of the most important things he's done is to actually stop the infighting that Deutsche Bank was notorious for before he became CEO. He faced a management board that was just rising with strife, and he replaced people he didn't see as loyal to him and put in charge people he knew very well. He requests strong loyalty, and it's worked. The implementation of his strategy has been much better than under previous CEOs who were notorious for the failure to actually to follow up on their word. That has really changed under Christian Sewing, and he's been lucky too, of course. I mean, the trading boom has helped him a lot. Let's not forget this. It's an important part of the success story.
So that elusive combination of planning and good fortune. How stable is Deutsche Bank now then, Stephen?
Well, it's pretty stable, actually. I mean, at least not less stable, really, than its competitors. And that used to be, as you pointed out, much different just a few years ago when people were really concerned about the viability of the bank. There was a crisis of confidence, CDS curves, and the credit spreads just blew out of proportions. And the credit investors generally, were concerned about the bank, and that has changed. It's got strong capital buffers now. I think it's regained the trust of many investors. And if you compare credit spreads, for example, Deutsche Bank's credit spreads to those of its competitors, there's really not a big difference anymore.
Yeah, what does it mean to be a normal bank these days then, Stephen? And will Deutsche Bank be one?
Yeah, well, a normal bank, I guess, is one that just sort of ticks along, right? I mean, that provides stable returns to investors and provides stable services to its clients. And Deutsche Bank is at least on track of doing so. The big question now that the CEO is facing is whether he'll be able to achieve his return on equity target, his profitability target. It's still something that many analysts doubt he will pull off. They don't think the strategy will actually deliver the returns he's promised to investors. We'll see next year if that happens. He has set a deadline by the end of next year to achieve his profitability target. Again, many think he won't, and we'll see then if he will.
Stephen, thanks very much. Bloomberg banks reporter Stephen Ahrens, thank you very much for joining us. You can read more on this Big Take story about Deutsche Bank on the terminal or at Bloomberg.com. And we will, of course, revisit the Deutsche Bank story should anything come through from that shareholder meeting that is taking place a little bit later on this week. Coming up here on the European Market Open, the UK must take bold steps to lead the economy out of the post-COVID and Brexit slumps. That's according to the Confederation of British Industry, the CBI. We'll be speaking to the group's Director General Tony Danker about the organisation's recommendations, areas of improvement. What would it like the government to enact in terms of policy change to enable the UK economy to seize the opportunities of the future and deal with the challenges? This is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
Certainly feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open this Tuesday morning. European equity markets making gains in the main, up by 0.4%. But some of that is a legacy story from yesterday as the German market, the Swiss market play catch-up. But we also have some M&A coming through from Germany, which we're factoring in for the first time. The FTSE 100 a little flatter, as you can see, struggling a little bit. If we move on to the sector breakdown, we'll see that some of the negativity coming this morning from the insurance sector, the media sector and telecoms. But in the main, European equity markets are in positive territory and sectors are positive. And so to the upside, we see real estate, of course, at the top of that board, up by 1.4%. And you won't be surprised to know that Deutsche Bank is the biggest gaining stock in that mix, up by 15.4%. Vonovia, that is the acquiring company that is buying Deutsche Bank, and that stock down by 5.5%. But even that weakness, not enough to outweigh the movement to the upside in Deutsche Bank. And so real estate, the biggest gainer. Technology also doing well after we saw the NASDAQ staging a strong session yesterday on Wall Street. Let's get a Bloomberg First Word News update. For that, here's Laura.
Thanks, Anna. EU leaders are vowing sanctions on Belarus and are imposing an effective flight blockade on the country. That's after the forced landing of a Ryanair jet and the arrest of a dissident journalist. The bloc is looking at Belarusian officials who should be added to a blacklist. National leaders are also looking at broader measures to target businesses and entire sectors of the Belarusian economy. The US has issued a new travel warning saying Americans should avoid going to Japan. It adds to doubts about Tokyo's plans to host the Olympics in less than 2 months. The action comes despite a far lower infection rate in Japan than in the US. Much of Japan is still under a state of emergency. If the UK finance sector were a country, it would have a bigger carbon footprint than all of Canada. That's according to a report from Greenpeace and the World Wildlife Fund. The impact mostly comes from firms' loan books and investment portfolios. According to non-profit CDP, emissions from those activities are 700 times higher on average than the direct impact. Greenpeace says finance is the UK's dirty little secret. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura writes here in London. Now, the UK must take bold steps to transform its economy with a series of changes that could be worth £700 billion over the next decade. That is the view of the Confederation of British Industry, the CBI, which says that the UK can bounce back from the dual hits of Brexit and COVID by encouraging decarbonisation and innovation and levelling up its regions. That is after the UK economy saw its deepest recession in 3 centuries. Joining us now is the CBI Director General, Tony Danker. Tony, thanks for joining us this morning on Bloomberg TV. I wanted to ask you about this vision of a country that can come together, something to unite the nation, to sort of move on from past challenges. How much is this about moving on from the divisions of the Brexit era? How much do your members want to move on?
Well, good morning. It's great to be here. I think we're not just moving on from Brexit now. I think the combination of Brexit already behind us, the pandemic still with us, but hopefully the worst behind us, and now with COP26 at the end of the year, just picking up your last story, a huge surge now by the world towards net zero. I think the economic agenda is transformed, actually. And I think we're only beginning now to realize that actually there's a lot of opportunity for Britain and British businesses, but we have to be incredibly future focused now and actually use this moment to sit down together, government, business, finance, and say, right, what are the big bets for Britain in the decade ahead? And our report tries to detail some of those big bets rather than just having them as ambitions.
So you talk about the move towards net zero. You want all these parties to come together to set this vision, and a decarbonised economy is, of course, part of that, Tony. The finance industry, I mean, we talk to people from the finance industry all the time who talk about being on board. An interesting report out from Greenpeace today, though, written up by our colleagues, that says if the UK financial services industry was a country, its carbon footprint would be bigger than Canada. How much do we need more from the financial services industry to get us to the place that you describe?
Well, of course we do, but I think they're on that agenda already. I think the City of London has the potential to be the leading financial hub in the world for green finance, for sustainable finance. I mean, most of the banks and financial institutions I speak to in the city, they are desperately keen to find projects and businesses to get behind. Of course, we need that taxonomy of sort of decarbonizing businesses so that we know what to invest in. So whilst I understand the sentiment in the report, and of course we can't be complacent, I think it describes a moment in time, but it doesn't look at the lead indicators. I think the city is getting ready to embrace this world. It helps that Mark Carney's involved in some of the preparations for COP. But yeah, look, we shouldn't be complacent, but I think the city can play a huge role in leading the world on green finance, and also helping us back some big investments in Britain. You know, one of the things we say today, Anna, is that we need to bring together the Bank of England, the Treasury, ourselves to say, look, what are we banking on as a country in terms of driving growth in the next decade? And where's the money going to come from? What's the role of government? What's the role of the private sector? What's the role of the City of London in financing all the green investment we are going to need in the decade ahead? And I'm pretty confident the city will rise to that challenge.
Does finance, do you think, have enough flexibility? Does money have enough flexibility in where it's invested, Tony? Because one of the things you're calling for is unlocking finance for growth and investment. And sometimes we do speak to investors who express frustration, perhaps, that maybe pension funds are restricted in the types of investments they can make in the real economy, for example, around infrastructure. How much of a blockage is that?
Yeah, I think that's fair. There's been a lot of concentration on that point. But look, I think we need to do the basic exercise that, you know, investment bankers call sources and uses, right? What are the uses of this money? You know, the government's plans are banking quite a lot on an infrastructure bank that's suddenly going to crowd in private finance, or this R&D target for the country of 2.4%. That depends on private finance. But I don't think we together have got a pretty granular sense of what's the money for, what are the big investment projects we're going to get behind, and then what are the sources of funding that can support that. And yeah, I definitely agree that patient capital could be doing more of the work. And I know the Bank of England are looking at the right mechanisms to make that so.
You talk also in your report about the need to scale up economic clusters, and I've talked for years to guests about the catapult network across the UK and the way that industry, government, academia are supposed to come together. So to what extent is it possible to do something new on that front?
Well, Anna, you're absolutely right. I think this is probably the biggest bet in the report, really, which is to do exactly what you described, but this time to build these coalitions led by business. You know, in the past, when governments tried this, they've sort of put in a catapult, or they've tried to get a university going, or a mayor's tried to get something going. It's sort of been led by the public sector in the hope that if we build it, they will come. Businesses and finance will crowd in around a great plan. What we've never really tried as a country is to get a coalition of businesses together. And it might be, I don't know, aerospace in the Southwest or renewable energy in the Humber, and say, right, are we all going to invest in making this place a success? Are we all in? And if so, what do we need from government to make it so? Do we need finance? Do we need regulatory freedom? Do we need the university and the colleges to get behind certain kinds of degree courses? And that's what we want to try this time around. Can we have business-led cluster strategies that say, you know what? Edinburgh Financial Services are going to grow by twofold, or Northern Irish FinTech is going to grow by twofold. And we as business will set the agenda for what you'd have to believe for us to really invest and get behind this. And I think we've never really tried that before as a country, and I want to put the CBI right at the heart of trying it this time round.
Okay, so getting business to lead instead of the public sector. Tony, thanks very much for joining us. Excuse me. Tony Danker, CBI Director General. Thanks for coming to speak to us here on Bloomberg TV. Up next, we'll speak to the Latvian Foreign Affairs Minister about the situation in Belarus as EU leaders vow sanctions and impose an effective flight blockade on the country. Details next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Welcome back to the European Market Open, second day of the trading week, and European equity markets making gains to the upside, up by 0.4%. Some real divergence, though. Markets that were open yesterday actually fairly flat. The FTSE and the CAC 40, the DAX lifted by its closure yesterday, and some substantial M&A taking place within the real estate sector, lifting Deutsche Bank and putting some downward pressure, as you see there, on Vonovia, the acquiring company. Let's move away from the markets and to the geopolitics. EU leaders have kicked off the process of further economic sanctions against Belarus after it forced a plane to land in Minsk and arrested a journalist and his partner on board. Belarusian officials are set to be added to an existing blacklist, and the EU is imposing a flight blockade on the country. My next guest is calling for Belarusian airspace to be closed for all international flights. Certainly the EU has made its views clear on this. Joining us now is Foreign Minister of Latvia, Edgars Rinkevičs. Very good to speak to you, Minister. Give me your response then to the decision reached, the decision that was come to at the meeting of EU leaders in Brussels. Are you pleased with what you heard?
Good morning, and thank you for having me. Yes, I think that decisions that have been made by the EU leaders are the right ones. As you said, the flight blockade is something that we were also asking, and this is basically because we are very concerned about security and safety of passengers, as we have witnessed actually on Sunday, the forceful landing of a flight is something that is not acceptable from security point of view, from air safety point of view, and of course it showed that Mr. Lukashenko is using all tools at his disposal to go after his opponents, even violating international law. So I think that this is only beginning to also some other measures, like also so-called sectoral economic sanctions as well.
How much credibility do you give to the Belarusian explanation as to why it was necessary to ground the plane in Minsk?
I don't believe that explanation we have heard so far, that there was a bomb threat, that there was a call, and they had to divert plane that was already landing in Vilnius airport. That was the final destination of that flight to Minsk. And surprise, surprise, what we are seeing that after landing in Minsk, they immediately detained the opposition journalist and his friend. And then when a flight was allowed to fly, 4 more passengers didn't show up. It looks like operation by special services more than actually the situation that would be permissible under the international law if there would be the real bomb threat. So I don't believe those explanations.
Do you think the EU, given what you just said there, Minister, do you think the EU should actually be doing more? I know that you were calling for specific sanctions.
Okay, guys, as you can see, position closed on Japanese yen, just right here. As you remember, where is my arrow? I'll point out where. We was holding from last week. We made £200 in profit, and because it was short position, broker paid us overnight charges. How come, why it's happened? If you want to find out how we trade, you need to go to company.co.uk and get the strategy, and we will explain everything: how to trade on margin, how to choose the right broker. Broker doesn't choose you, you have to choose the broker. For strategy you use, some brokers won't offer you trading on margin, and other brokers won't offer you selling shorts, same pairs or indices. So if you want to trade and if you like our strategy, you need to go to company.co.uk and get the strategy. Okay? Well done, guys, who followed our trades on Japanese yen. You made a profit. Let's move on. Let's look for another opportunity to trade pairs. Speak to you later, guys.
I just saw the information from Flight Radar that some KLM, Lufthansa, I think British Airways flights are also trying to avoid. Of course, I understand there is an economic cost to that. But then, frankly, the passenger safety has always been priority #1 for all airlines. And I think that, first of all, what we need to look at this situation, this is the safety of passengers. There is no guarantee that you or somebody else flying over Belarus all of a sudden are not forced to land. You are detained because something in your program went not as Mr. Lukashenko like, and then he wants you to interrogate and maybe to put in jail for a couple of years. So sorry, but I think this is the safety of passengers issue #1.
So that's what you're arguing for. We saw images of you yesterday with the mayor of Riga replacing the Belarusian flag with a flag that is important to democracy campaigners in Belarus. And this clearly has angered the Belarus government, calling it an act of international vandalism. And now I see as a result that perhaps we've seen a deterioration in diplomatic relations between Latvia and Belarus. Can you confirm that that we've seen diplomats withdrawn from both places as a result of this? And is this an unexpected development?
Not at all. I can confirm that Latvian diplomats are leaving Minsk, and also the Russian diplomats are going to leave Riga very soon. But let me say that if we see such unprecedented acts as we saw on Sunday, if we see that there is ongoing crackdown of peaceful protests, people who are fighting for their freedom, then also it was a right approach initiated by the Riga city to change, because we have now international ice hockey championship going on, to change as a symbolic gesture this flag. And frankly, I'm not going to take any insults from people who could be easily also accused of acts of piracy or acts of terrorism, and also acts of terrorism against their own people. So yes, this is the situation where we have diplomatic deterioration. That was the choosing of Minsk. It's up to them how they want to continue living in this environment.
If we do not see the journalist at the center of this, Minister, released, do you think that Europe should take further measures? Do you think there will be possibly an opportunity for Europe to apply further sanctions?
This option needs to be on the table, but let's not forget that this is not only about this last incident, this last episode of detention of a journalist and his friend. There are hundreds of people currently in Belarusian jails who are in the wrong place for any wrong reason. So I think that this is the broader issue, and yes, indeed, we should not forget about that, and Europe needs to continue to put pressure. Also, if there is a need, not only political, but also more economic, that's true.
Minister, thanks very much for joining us. Edgars Rinkēvičs, Latvia's foreign minister, thanks for speaking to us here on the European Market Open. Coming up on the programme, we'll be back to the market conversation, back to the inflation narrative. Fed officials are once again downplaying inflation fears. We'll discuss what impact that's having on the markets next. US 10-year yield down at 1.58, that is the handle. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 53 minutes into our trading session, and things deteriorating a little bit outside of those markets that don't have big real estate M&A and were closed yesterday. Both of those apply to the DAX, and the DAX outperforms, up by 0.7%, but it is catching up, and the FTSE 100, the CAC 40, both a little flatter, perhaps looking for a little bit more direction. Laura Cooper, Bloomberg Markets Live macro strategist, is with us. It did seem as if the global narrative, Laura, though, good morning to you, the global narrative looks quite positive for risk assets. I mean, NASDAQ futures up 0.6%, E-mini futures also higher. I wonder why this bit of a stumble here in Europe.
Yeah, that's a good question. I think, as you mentioned, European equities are really struggling for direction, but they are still testing those near record highs. And I think this just captures that spillover from that dovish Fed stance yesterday that does seem to be propelling just risk sentiment this morning. We do have the Bloomberg Dollar Spot Index falling to its lowest since 2014. So I think really that's kind of bolstering that just this yes, we're seeing some cautious moves in Europe, but I think as the U.S. opens, I would expect kind of to have that still dovish stance propel risk further.
Yeah, and how are you interpreting the latest inflation conversation then, Laura? I mean, the Fed has not changed the script, sticking to the script, talking about inflation being transitory. 1.59 is the handle on the US 10-year. I asked Mark earlier on today, our colleague Mark Cudmore, whether, you know, this was because the market was coming around to the Fed's way of thinking, or is it just that the market is coming around to the view that the Fed is just not going to hike in a hurry, and therefore US 10-year yield can sit lower, can sit at 1.59.
Yeah, so certainly think that the price action does suggest that the market is currently believing the Fed's narrative that they're going to see these near-term price pressures ultimately fade. That does have break-even steadying. We are seeing real yields slip even further. But I do think, you know, there are a number of risks ahead in terms of the Fed keeping those inflation expectations anchored. That's clearly what they're focusing on. So later today, we have that consumer confidence index where underlying inflation expectations for the next 12 months are already at the highest since 2011. We do have that core PCE print on Friday, which, like CPI, is expected to post the strongest gain since early 1980s. So I think it'll be hard for markets maybe to continue to believe the Fed so long as we get more upside surprises potentially ahead.
Yeah, I've been looking forward all week, Laura, and I have failed to do this, but I'm going to do it later on this week to use one of these charts of showing PCE expectations set to reach levels not seen since, what, the early 90s, but interest rates, of course, not expected to reach early 90s Greenspan levels. We'll get to that conversation as the week progresses, as we get closer to that PCE number. Laura, thanks very much for joining us. Laura Cooper, Bloomberg Markets Live macro strategist. Thanks for being with us on the program. That is it for the European Market Open. Surveillance Early Edition is up next. They'll continue to give you all the details of what's happening here on European equity markets, with the FTSE 100 a bit of a laggard, the CAC 40 also lagging behind. It is the German market that's carrying us through today. It is playing catch up. It was closed yesterday. A lot of M&A in the real estate sector going on there as well. So the DAX up by 0.7%. US futures, though, are pointing a little bit higher. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest
biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think Bitcoin's greatest risk is its success.
There will be additional sanctions on individuals that are involved in the hijacking.
The time of rhetorics and vocal expression passed. It's over. We need clear actions.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the Early Edition on Tuesday, the 25th of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Belarus faces broad sanctions from the EU after forcing a plane to land and to arrest a journalist on board. Ursula von der Leyen calls the act an attack on democracy. Not there yet, Fed officials steer clear of putting a date on taper talk while playing down inflation risks. Stocks and futures gain. And Amazon is set to announce a $9 billion takeover of MGM, bringing James Bond, Rocky, and the Pink Panther into the streaming services library. Now let's get straight to the top market stories with our Danny Berger. Danny, inflationary nerves ebbing today. What are we actually seeing in today's session so far?
Yeah, Francine, it's really interesting because to some degree, and really to a large degree, this isn't a new narrative. This isn't really a new story. So it's fascinating to see that markets globbing on to Fed speakers saying that inflation is going to be transitory is able to have such a big impact on markets. And perhaps that speaks to really the price to perfection sort of scenario that we're living in right now, that anything is really able to catch the narrative and imagination of stock markets. And today, of course, it's that transitory inflation story, which is winning out the day really in over everything. So you have the 10-year yield falling below 1.6%. You have Europe doing well. A lot of that is because Germany's reopened after a day on holiday. And NASDAQ futures, they are the big outperformers. So it's those big, heavily, richly priced sort of names that are outperforming. And then to the downside, you have the dollar still, again, with that wider reflationary narrative. One of the more interesting things, though, is commodities aren't really moving much higher today. They're about unchanged if you look at it as a whole. And a lot of that has to do with China. So that's really the one sort of angle to this inflationary story, which isn't necessarily filtering through today's markets, Francine.
Danny, if you look at BlackRock's Momentum ETF, it's also set to dump a lot of its tech holdings. So what does it mean for the markets?
Yeah, I think that's interesting because if you compare this to what's happening with that Momentum ETF, it shows that a lot of the shift has already happened in the markets. And I think this just really helps us give some perspective. Today's like today when you do have tech doing well, and that's over the past ETF is going to rebalance based on what those past 12 months have given us. So what has that given us? It means that financial stocks are now a third of the total portfolio, and tech is moving from 40% to 17%. So that's a 23 percentage points reduction. So regardless of what the Fed says, regardless of where we think inflation is going, this reflationary shift in rotation within the market has already happened. And now, sort of as a delayed reaction, it's getting reflected in this ETF, Francine. And this is a $16 billion ETF, so this in itself will surely spur a lot of moves. Danny, ETF, so this in itself will surely spur a lot of moves.
Danny, thank you so much. Our Danny Berger there with all of the action on the markets. Now, EU leaders are planning broad economic sanctions against Belarus after it forced a Ryanair flight to land in Minsk. Belarusian authorities arrested a dissident journalist and his partner on the ground in what Ursula von der Leyen called an attack on democracy. Well, joining me is Bloomberg's Maria Tadeo, live from Brussels, who's, of course, been following the EU leaders' summit. Good morning, Maria. So what does a package of measures actually include?
Well, Francine, they're going after the airspace, essentially shutting flights in and out of Belarus, but they're also going after the money. Now, the European Council and the European leaders yesterday making it clear they want to target now new economic sanctions that affect people, but also the state-owned companies in Belarus that they believe are backing financially the regime of Lukashenko. So this takes the financial pressure to a whole new level. Now, behind the scenes, also, Francine, we're being told that this was a package of measures that was approved quickly by EU 27 leaders, and the agreement came about very fast. And this is the part of the optics that European leaders wanted to send to in this message, that when it comes to an external threat, something that they believe is an direct attack on European democracy and also the European airspace, there is no bickering among the EU 27. This was approved very quickly yesterday.
Maria, European leaders also discussing Russia. So how are diplomatic relations on that?
Yes, and you know, Francine, the language that was coming out from the European Commission yesterday, from the head of the Commission, Ursula von der Leyen, was very tough. It's probably some of the toughest language that we've seen about Russia. She said that for a year now it has been escalating its actions. It is trying to destabilize Eastern European countries. She talked about cyber hacking, meddling in elections, also assassinations carried out that showed that right now having a normal diplomatic relationship with Russia is very difficult. She did say, however, that there is a reality here, and that is that Russia is a big country, is a big geopolitical actor, and geographically is the biggest neighbor to the European Union, so there needs to be some engagement. However, she did also open the door potentially for more measures and more sanctions to happen in June if they don't change behavior.
Maria, thanks so much. Maria Tadeo there joining us, of course, with the very latest on the EU leaders. Now, I'm looking at my terminal because we do have the IFO figures, and I'm delighted to be speaking to Mr. IFO, Mr. Fust, very shortly. Germany's IFO Institute released its Business Climate Index for May. It has come stronger than expected at 99.2. The estimate was placed at 98. Now, a little bit later in the program, the IFO president, Clemens Fust, joins this program after releasing its German Business Climate Index. But up next, more on Belarus, and after Erdogan fires another central bank deputy governor in Turkey, we'll also talk EMFX with Morgan Stanley's James Lord. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Eastern Europe is once again the nexus of geopolitical tensions on the continent. Belarus is facing broad sanctions from the EU after forcing a plane to land on Sunday and arresting a journalist on board. At the same time, the revolving door at Turkey's central bank sees a new deputy governor installed just 2 months after the governor was replaced. So, is the upheaval increasing volatility in emerging markets? Well, joining us now to discuss all of this is James Lord, Morgan Stanley's global head of FX EM. James, thank you so much, as always, for coming on to speak to us. When you look at EM overall, how bullish are you?
On emerging markets, we're not particularly bullish, to be honest. I mean, we think just like many other asset classes will benefit in the short run from just how dovish the Fed is, and we are expecting the dollar to go on a little bit of a weakening trend in the short run, but I think the medium-term outlook for EM is quite challenging, really. I mean, the asset class, if you think about what's happened in the last 12 months, when every other asset class has really rallied enormously, valuations have become extremely rich when you look across global equities and global credit. Yeah. EM hasn't really participated significantly, and that's because of a lot of underlying sort of bottom-up pressures that the asset class faces, whether it's around politics or whether it's around the lack of growth, the lack of fiscal space. I mean, there are a lot of challenges that EMs face that I think is going to make it difficult for them to stage some kind of, late cycle rally, really. So we see this as a temporary phenomenon, and then over the second half of the year, we'd expect the asset class to start weakening against the dollar.
Yeah, I mean, a lot of the emerging markets have already underperformed. Is there anything that actually you think has been oversold?
Well, we actually quite like the ruble at these levels. We've seen positioning has been cut back quite substantially during the sort of April period when we saw a lot of concern around sanctions escalation. But we think that now, particularly with the central bank embarking on a pretty decent hiking cycle. I mean, we see them hiking by another 100 basis points or so over the next year. The central bank's pretty hawkish, positioning's quite light. The fundamentals are pretty good, really, for an EM economy. The fundamentals are fantastic, really, for a fixed income investor. We see some opportunity in the ruble now. Clearly, I imagine that there will be questions about what could happen next with respect to the fallout from the Belarus issue, but we don't think it's going to meaningfully affect the value of the ruble, really. So that is one that we quite like.
James, overall, I mean, what's your take on some of these Eastern European countries that used to be satellites? I mean, we look at Belarus, but others. Is there any other values in some of the smaller countries if politics doesn't get in the way, or is it just too risky at the moment?
Well, I mean, the main ones that we cover are all sort of within the EU umbrella, I guess. So, I mean, we like the Polish zloty at the moment. I mean, this is not a currency that is really affected by any particular sort of political turmoil. But relative to other EMs, the fact that Poland is going to be benefiting enormously from the EU Recovery Fund, for example, disbursements on that should be getting underway in the second half of the year. They benefit hugely from, relative to the size of their GDP, Eastern European countries benefit enormously from inflows related to the EU Recovery Fund. And we think Polish zloty is pretty cheap. It's kind of lagged some of its other Central Eastern European peers recently. There's a bit of concern about the Supreme Court decision about the Swiss franc mortgage issue, but again, we think it's quite well flagged, it's reasonably priced, and so we think Polish zloty can also do quite well. So we're short euro versus the zloty.
James, what do you do with Turkish lira right now? I mean, we have another reshuffle from the deputy governor this time.
Yeah, another reshuffle. I mean, we've been recommending to clients to be long dollar Turkey. I mean, this is a sort of long-standing trade of ours. Our economists are expecting to see 300 basis points of rate cuts later in the year. Inflation is still a bit of an issue. It's still quite sticky to the top side. And the tourism season is very uncertain. I mean, Turkey's only a month or so ago was running some pretty high COVID infection rates. The vaccination campaign is underway, but a long way from being completed, and there is uncertainty about what kind of arrangements will be in place for international travel. So I think Turkey could be facing another difficult tourism season. There's definitely a risk around that. And I think if you mix in a few hundred basis points of rate cuts and high inflation, for us, I think the risk reward favors being long dollars. So that is one EM currency that we're not big fans of at the moment.
James, I know if you look at some of the other countries, I mean, you're steering clear of Colombia, Bahrain, I think Sri Lanka, but like Saudi Arabia. I mean, how is that also influenced by COVID-19, or is that actually just on structural reforms and structural changes?
Well, I mean, you mentioned Colombia, and I think that's an interesting country given the ratings downgrade that we saw recently, and we're kind of underweight Latin America in general, really. Like we see a lot of kind of growth pressures in Latin America. We see the post-pandemic recovery being the weakest of the three regions, underperforming Asia and CEMEA. And there are big social pressures as well. We can see with the recent protests and the backlash against the government's proposed tax reforms that it's difficult for countries facing these social issues to really implement the kind of fiscal stabilization measures that markets are looking for. So Colombia is not the only country where you see that kind of pressure from the public coming up. We saw with the elections in Chile that people are demanding change there as well. We've got elections coming up in Brazil and also in Mexico. So I think Latin America is a region that I think for investors is going to be quite challenging from a political standpoint, and in the face of needed fiscal consolidation and weak growth. So we're kind of underweight Latin America. We're short the Colombian peso. We're not particularly big fans of Brazilian real at the moment. So yeah, I think LATAM is an interesting region and one that will probably underperform the other two.
James, thank you so much. James Lord there, Morgan Stanley Global Head of FX EM. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US has issued a new travel warning saying Americans should avoid going to Japan. It adds to the doubts about Tokyo's plans to host the Olympics in less than 2 months' time. The action comes despite a far lower infection rate in Japan than in the US. Much of Japan is still under a state of emergency. Now, the Bank of England is playing down the risk of runaway inflation. Governor Andrew Bailey says the expected acceleration in prices this year will likely be temporary. That was echoed by one of his deputies, John Cunliffe, who says inflation will return to the bank's 2% target as growth does slow. The UK is starting formal preparations for a free trade deal with India. It wants to begin negotiations later in the year as Prime Minister Boris Johnson seeks to prove the benefits of leaving the EU. The UK and India want to double trade between the two countries by 2030. Back in 2019, it was worth about £23 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Germany's IFO Institute releases its latest business climate index for May. It has beaten estimates. How is the economic engine of Europe faring? Up next, we speak to the IFO Institute President, Clemens Fust. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacquet here in London. Now, the outlook for Europe's largest economy seems brighter. Germany's IFO Institute released its business climate index for May. It has come in stronger than expected at 99.2. The estimate was placed at 98. It has also beaten the April figure of 96.8. But what does it all mean for the continent at large? Well, joining us now is Clemens Fuest. He's the IFO Institute president. Thank you so much, Mr. Fuest, for joining us. As always, when you look at exactly what happens to the German economy, so restrictions have been lifted, things are getting slowly back to normal. What kind of recovery are you now expecting? Are people spending? Can you see already patterns that you think will continue in the future?
Well, it's starting. What we see this time is that there is increasing optimism in the sectors that were most affected by the pandemic. Tourism, hospitality, retail. The spending still has to come because we are just at the beginning of the opening process. But the companies are expecting improved business in the months to come, and that's what we expect too.
When you look at some of the output, how much are you actually expecting the output to rebound?
So we're expecting output to grow by 2.6% in the second quarter and something similar in the third quarter after the contraction in the first. So this is a recovery. We expect pre-crisis level to be reached at the beginning of 2022. So a strong upturn in the second and third quarter. There are some risks there. One is intermediate goods like semiconductors and other parts, commodities getting scarce and expensive, and this is kind of holding back manufacturing, where things have been going very well for some time. We also see this in the construction industry, where some materials like wood are getting more expensive, so there are some risks for this upturn, but in general, the picture is fairly bright.
Right, but so on this, actually, how much of a risk is it to the economy, both the fact that materials are hard to come by and that there are risks to the supply chain?
Well, it's certainly a significant risk. Most companies are expecting to pass on these prices to consumers, and it remains to be seen whether consumers accept that and whether that will have an impact on demand. But in general, this certainly is a limiting factor. At the same time, there is a lot of potential for recovery in the most affected sectors like hospitality, retail, and so on. So this is just coming, which means overall we don't expect the recovery to be held back completely by these shortages, but they're certainly a dampening factor.
What are you expecting in terms of vaccine passports or everything that's kind of being discussed at the moment? Would that give a boost to Germany at the margins because people will feel confident about the future, or do you think it makes little difference actually?
I think the impact will be limited. There will be more opening up of the domestic economy. The vaccination passport is more about traveling, very important for the southern European countries, and indirectly the recovery of southern Europe will then have an impact on Germany because it's an important export destination, but that will be later in the year. So for the domestic economy in Germany, the vaccination passport is less important.
Mr. Fuest, overall, when you look at the pace of vaccination in Europe, do you think that Europe will be able to catch up with other parts of the world? And does that just make it a lot easier, or do geopolitics and also what happened in Belarus put a dampener on things because Europe is once again faced with very hard questions?
I think the Belarus crisis will not be a problem for the economic recovery. The vaccination progress will. Europe catches up at the moment, but we already see that there continue to be shortages in the availability of vaccines, and at the same time, the number of people willing to be vaccinated is declining among those who haven't been vaccinating yet. So increasingly, we see people who have concerns about the vaccine, so that the overall vaccination process will slow down. It's something we see in the US and the UK as well. And that will leave some uncertainty about infection numbers in the months to come.
Mr. Fuß, thanks so much as always. Clemens Fuß, their IFO Institute president. Now, don't miss our coverage on the upcoming German elections right here at Bloomberg. 11 a.m. London time, we'll hear from the finance minister, Olaf Scholz. If you want to listen into that conversation, type LIVE GO on your Bloomberg terminal. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Belarus faces broad sanctions from the EU after forcing a plane to land to arrest a journalist on board. Ursula von der Leyen calls the act an attack on democracy. Not there yet, Fed officials steer clear of putting a date on taper talk while playing down inflation risks. Stocks and futures gain. And Amazon is set to announce a $9 billion takeover of MGM, bringing James Bond, Rocky, and the Pink Panther into the streaming services library. I'm actually a huge fan of all three. Disclaimer. Now, good morning. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance, the early edition on this Tuesday, the 25th of May. European stocks moving higher this morning, led by German stocks, which were closed yesterday for a holiday. Let's get through the individual stocks, really, that are moving higher. Danny, we want to get through the movers. I also need to speak to you about the Pink Panther and Amazon, because that's a whole other, board game, and it kind of makes us want to watch old movies again.
It does. Also, I don't know if anyone caught it, but that graphic you showed at the start was James Bond, but with Jeff Bezos' head. I'm so obsessed with it. The Surveillance Early Edition team makes the best graphics. That says everything you know there. Yeah, exactly. Okay, look, Amazon, of course, that's going to be the talk of the day. But when it comes to European markets, it's really all about Germany. I mean, you mentioned it was closed yesterday, reopened today. And because of that, it is trading at a new record. Swiss stocks trading at a new record as well. So here's another deal. I have to admit, it's not as exciting as Amazon possibly buying MGM, but it is still the biggest real estate deal ever in Europe. So for that reason, we have to be somewhat excited about it. And it's Deutsche Wohnen. So they're being bought by Vonovia. This is a $19 billion euro deal, rather. So of course, because of that, Deutsche Wohnen, which is being bought around 53 euros, is trading higher, not quite at that price yet. And as we usually see, the company that's buying the acquisition target is moving lower because, of course, there are those costs associated with integrating a new company. So Vonovia down about 4%. And finally, Royal Mail, this is a company which is well known across the entirety of the UK, but it had lost its blue chip status in 2018, falling off the FTSE 100. It had become too small. Well, Royal Mail has really changed their tactics, focusing on parcels during the COVID pandemic. And because of that, they've seen really strong earnings. Their share prices have rallied. And now Liberium says that they are set to be included once again in the FTSE 100. We get the results of that rebalancing later today, Francine.
Danny, thank you so much. Danny Berger there with some of the main stock movers. Now, Deutsche Bank's AGM is this Thursday. The chief executive, Christian Sewing, is expected to highlight the turnaround at Germany's largest lender. Now, it's a far cry from the shareholder angst that he faced 2 years ago, as the bank remained shackled with the Sick Men of Europe finance tag. Now, we've taken a deep dive into the recent changes at Deutsche in today's Big Take on the Bloomberg Terminal and website. And I have to say, it's a great story, well thought out, well written, and I urge everyone to go and read it on the Terminal or also on our website. Now, for more, let's talk to our Bloomberg banking reporter who's worked extensively on the story. He's Stephen Aaron. Stephen, good morning. So first of all, how did Sewing actually turn Deutsche Bank around?
Hey, good morning. Well, I think one important step he's taken is to end what was previously heavy infighting on the management board. Top leadership they hated each other for a long period of time. Sewing has ended that. He put in place people loyal to him, and they have helped him implement a strategy that was difficult previously too. Previous plans failed because they were big words but little action. That has changed under Sewing, and that's an important but, he's also been very lucky. Sewing has been riding a trading boom, and Danny just mentioned the DAX, the German benchmark index, rising to a new high. All of the market buoyancy has helped Deutsche Bank a lot too.
So how stable is Deutsche Bank now?
It's if you compare it to previously, very stable. It's a sort of a bank like other banks in that respect. It's got solid capital buffers. The concern that was surrounding Deutsche Bank for a very long time has dissipated. It's not being questioned. The viability of the bank is not being questioned anymore by credit investors, for example. If you compare credit spreads of Deutsche Bank to competitors, then there's not a big difference anymore. So from a stability perspective, you can consider it a viable bank, yeah.
So I know, we tend to, Steve, ask you whether this will ever be a normal bank. I mean, I don't know what normal, define normal is like a whole other show, which will take us 2 hours, but will it get to something that I guess is more templated?
Yeah, I mean, normal, I guess, is something that doesn't stand out in a negative or sometimes in a positive way in comparison to other banks. And that was the case negatively for Deutsche Bank for a very long time. We talked about in the story, we talked about the dysfunctional decade. And it's true, Deutsche Bank was seen as the sick man of Europe for the better part of a decade, really. And that is no longer the case. People still pay a lot of attention to the bank. And as we write in the story, people are concerned the next accident is just around the corner potentially, but it's not like there is negative news about the bank all the time. It's not always Deutsche Bank anymore. So it's become more of a normal bank. And if the CEO now restores sustainable profitability to the bank over the next, 3 years or something, then yeah, I think people won't consider it an unnormal, a disnormal bank anymore.
Stephen, thank you so much. Bloomberg's banks reporter Stephen Aarons there joining us on this great big take, which you can find again on the terminal, but also on our website. It's a big take story on Bloomberg.com. It's NI Big Take. Go if you need the function on the Bloomberg terminal. Now, coming up, European leaders are promising tough sanctions after Belarusian authorities forced a Ryanair flight to land in order to make an arrest. We'll have the latest next. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. It is the biggest ever takeover in European real estate. German residential property firm Vonovia has agreed to acquire rival Deutsche Wohnen for 19 billion euros. The bid price represents a premium of some 18% over the target's closing price on Friday, when shares were last actually traded. The deal brings together the two largest residential landlords, which control more than 500,000 apartments. Now, payment processing firm Square is quietly preparing to offer savings and current accounts, taking direct aim at the big banks. Evidence of the plan, not actually yet announced, appeared in hidden code in a recent update to the company's smartphone app. It also suggests that Square will set itself apart by shunning monthly service charges and fees tied to minimum balances and overdrafts. Morgan Stanley has reached a deal to end a lawsuit which alleged discrimination against black female staff. Longtime employee Marilyn Booker, who became the bank's first global head of diversity, sued the firm last year, saying management had refused to adopt her plans to address racial bias. She said the bank failed to address problems with hiring and retaining black employees. Morgan Stanley has strongly rejected Booker's claims and vowed to defend the lawsuit. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, European leaders are reacting to the Belarusian government forcing a Ryanair flight to land in Minsk in order to arrest a dissident journalist, calling it an outrage.
What has happened here, this is unseen.
It's an international scandal.
I think hijacking the plane and behaving like that, it is the act of terror.
The European Council decided that there will be additional sanctions on individuals that are involved in the hijacking, but this time also on businesses and economic entities that are financing this regime.
Particularly also against companies, so therefore we need more economic sanctions and entities supporting the regime.
We need clear actions in order to change the pattern of behavior of this very dangerous regime.
Well, the EU is now promising broad economic sanctions to what it says amounts to hijacking. Joining me now is Ross Matheson, Bloomberg's international government editor. Good morning, Ross. I know that there hasn't been a shortage of political news, but how is the U.S. actually responding to this issue?
Well, President Joe Biden has, like others, condemned the actions of Belarus. He's called it a direct affront to international norms, and he's asked his advisors to come up with options to respond, but it's unclear at this stage what those might be. They would likely mirror, to some extent, whatever the Europeans do, and right now the EU is kicking the can down the road at least a month on sanctions, let alone broader penalties for business and the economy. So you wouldn't expect anything necessarily from the White House either for at least a month on this. And the question then is how much or whether any action taken by the EU and the US actually changes things, because Belarus is already heavily sanctioned, and that's not stopped the President Lukashenko from tightening his grip at home and cracking down on dissent.
So, Rosa, are we seeing any sign that it might actually affect the prospects for a Putin-Biden summit next month?
For now, no. That's even, of course, as Russia strongly lines up behind Belarus on this one. You can see the expressions of support today, and President Vladimir Putin is reportedly going to meet with Lukashenko later this week. So potentially complicates things, but then again, it's already a very complicated relationship with lots of challenges. You've got Ukraine, you've got hacking, election meddling, the jailing of opposition leader Alexei Navalny, and so on. And despite that, there's a real eagerness on both sides, it seems, to have this meeting. For Putin, it gives him recognition as a leader who still matters. And for Joe Biden, of course, he's trying to thread the needle with Russia because they do need to work together on issues like Iran. And he may be wary about Russia and China drawing closer together and excluding the US. So for now, it looks like planning is going ahead for a meeting potentially in Geneva around the middle of next month.
Ross, thank you so much. As always, Ross Matheson there, our Bloomberg International Government editor. You can also follow everything that she edits and writes on the website and our terminal. Now, joining us is Emre Peker, Director of Europe Team at Eurasia. Emre, thank you so much for joining us, because this is, I guess, a hot political potato, which the EU is trying to deal with. But does it make any difference if they don't persuade also Russia to be on their side?
Thanks for having me on, Francine. No, without Russia, it's going to be very difficult, because over the past year, essentially, the Lukashenko regime has turned increasingly into a pawn of President Vladimir Putin, a relationship which will be forged even closer when the two leaders meet in Sochi on Friday. So in essence, the decision by the EU to also go after entities and businesses linked to the regime and the financing of the government in Minsk will only increase Lukashenko's dependency on Putin and arguably deteriorate even further the EU's ability to influence events in Belarus.
But Emre, at some point, I mean, is Lukashenko and Putin, very, very close? I know there was a summit, and it really, it points to the embracement of the two countries. But at some point, does Belarus become too difficult for Putin to deal with?
Lukashenko doesn't have any friends at the moment, so I think he's quite dependent. And the financing question is a whole other issue. And if the EU cuts off funds as one of its biggest export markets, that will definitely hit the Minsk regime negatively. But at the same time, the EU also has this ambition and desire to keep contact with civil society in Belarus, to support the opposition, to support democratic process in the country. But the more the EU constrains Belarus by banning flights to and from Belarus, by closing its airspace to Belarus, by restraining its finances, the more difficult it will be to exercise any levers to win over Lukashenko too.
But Emre, does the EU, can they actually affect change in Belarus? And if they can't, then will this inspire or give a green light to other regimes to do the same, like hijack planes and actually take dissidents or journalists off them?
I think this punishment will be severe enough that it will be a clear warning sign. I mean, let's not, the proof will be in the pudding, right? Because the leaders have said that entities will be sanctioned, but we haven't yet seen to what extent and how severely the EU will go after the financing mechanisms of the Belarusian regime. So the question is, once the EU acts, and considering how swiftly they have acted within 24 hours, effectively almost, that's a clear signal to a lot of other similarly minded capitals to be careful, especially if their economies are exposed to that of the EU.
If the US doesn't get involved, though, does it have quite the same teeth? Is the EU now better off trying to get Washington to be involved in this, to make sure that, it's dealt with in a way that there's almost, no doing it again?
Yeah, I mean, so far what we've seen from Washington is taking a backseat to Brussels and deferring to the EU. They wanted their European allies to be at the forefront of the reaction to Belarus, given the geographic proximity and closer relations. So given the size of the country and its relatively small importance, it's difficult to see what further the US can do other than matching what the EU is doing, also along with the UK, obviously.
Emre, when we look at what's happened over the last 5 to 6 years, I guess the political instability in Eastern Europe with Crimea, with Ukraine, has been pretty incredible. Does that continue to escalate no matter what happens with Belarus?
That's the big question for the EU, and essentially if it weren't for the Ryanair hijacking, it was going to be one of the main themes last night, how the EU tackles its problems with Russia. That discussion has been punted off to June now, with the leaders requesting yet another report on the Russia strategy from their diplomatic services. So I would reckon that going forward, the Eastern Front is going to continue being problematic for the EU. Russia has a knack for maintaining these frozen conflicts, be it over Nagorno-Karabakh, be it in Georgia and South Ossetia, be it in Ukraine and Moldova, to play into differences in the EU and destabilize the region. And I struggle to see a mechanism by which the EU can really strengthen its resolve vis-a-vis Russia to bring an end to these circumstances.
Emre, thank you so much for joining us. Emre Peker, the Eurasia Director of Europe team. Now, coming up, Amazon could announce an acquisition of MGM, the studio of Gone with the Wind and Rocky, as soon as today. That's according to Bloomberg sources. Well, we'll get the latest on that. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Amazon could announce an acquisition of MGM, the studio of Gone with the Wind, and Rocky as soon as today. Bloomberg sources say the e-commerce giant is set to pay nearly $9 billion for the business. The agreement would bring a vast library of movies and shows to Amazon, which operates the Prime Video streaming service. Well, let's get more now with Bloomberg Intelligence's Matthew Bloxham. Matt, good morning. The Amazon Prime Video service, already pretty successful. Why are they doing this deal?
Yeah, hi, Francine. Yeah, as you say, I mean, there are over 200 million Prime subscribers now, and recently in April they said that about 175 million of those in the last year had watched videos, and streaming hours were up 70% year on year. So it is successful, but I guess they continue to look for growth in the overall Prime service. It's a hugely valuable part of the Amazon ecosystem. And I guess having a more interesting, valuable, strong streaming service is a way to kind of convince existing Prime subscribers to stay with the service, and maybe a hook to kind of help keep growing that total of 200 million. So I think Prime is a kind of very rich service. Obviously, a big part of it is the kind of free delivery, the 24 and 48 hours, but things like video are potentially increasingly important to keep the momentum going for growing that customer base.
How much, Matt, will this deal actually change the streaming landscape?
I think in the short term, probably not. I mean, clearly Netflix and Disney are the leaders in terms of the breadth of content and the success they're having at the moment. But I think it's going to be interesting to watch to see what Amazon actually does, not just with this acquisition, but with things like the deal they've done with the NFL on sports rights, and whether they buy more sports rights internationally, and whether they look to kind of package that up to kind of really give Prime Video a sharper edge, a clearer focus. This is why you should buy this service. I don't think it's quite there yet, but they could do some interesting things. They could make a lot more of some of the franchises like James Bond, Rocky, for example, to kind of really kind of create some stronger communities and focus for that service. So I think definitely Netflix and Disney will be looking at this closely, and it may be something that evolves over the next 2 or 3 years to give Prime Video that sharper edge.
Do you think, Matt, this is just the beginning of more consolidation in the sector? I mean, already, this landscape has gone through huge shifts and changes.
Yeah, I think so. I mean, we may even see a bit more expansion before we see contraction. I mean, in Europe, there are local streaming services that are still coming to market and expanding into new territories. I think, ultimately it's going to consolidate. I think, consumers in the next 2 to 3 years are going to start to question, why am I paying $15 a month for that service, $10 a month for that one, $8 for that one, and we'll look to kind of consolidate what they're spending their money on. So I think, the next 2-3 years, definitely, I think we're going to see a lot more consolidation, but we may also see some of these US players look to strengthen their investments in some of these regional players, for example, in Europe, to strengthen the locally originated content they've got in their offering. So there might be less players, but they might be bulking up in other parts of the world as well as in the US over the next 2 or 3 years.
Matt, thank you so much. Bloomberg's Matthew Bloxham there. Now, this is the picture for the markets. A lot of the focus, of course, is what we also heard from Fed governors. So we'll look at treasuries. We'll also look at some of the tech companies. Bitcoin, never far from focus. I know our Danny Berger had a great recap of some of the main things that we're watching out for, but it's very clear that some of the Fed comments on inflation buoyed the markets. Now, if you look at exactly, what we've heard from officials, they've continuously played down some of the risk of persistent inflation. I'm looking at a gauge of dollar strength against a basket of peers, and it's actually headed for the lowest level since January. So we'll look at that. We'll also look at treasuries and some of the upcoming economic data. Bitcoin holding on to gains after Elon Musk's efforts to bolster the credentials of green stoked a rally. Now, smart conversations continue on Bloomberg Surveillance Early Edition. In the next hour, we'll speak about Belarus to the Pulitzer Prize-winning author and John Hopkins Senior Fellow and Applebound. That's it. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. This is Bloomberg.
Expect clear, concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works for Bruce.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is not acceptable, and it's why we put the debate on sanctions on the table.
There will be additional sanctions on individuals that are involved in the hijacking.
The time of rhetorics and vocal expression passed. It's over. We need clear actions.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning from London, Berlin, and New York. Our top stories today. Belarus faces broad sanctions from the EU after forcing a plane to land to arrest a journalist on board. Ursula von der Leyen calls the attack an attack on democracy. Well, Elon Musk's push to boost Bitcoin's green credentials spurs another rally in the cryptocurrency, but it trims gains this morning. And Amazon is set to announce a $9 billion takeover of MGM, bringing James Bond, Rocky, and the Pink Panther into the streaming services library. Kelly, I know we'll spend a big amount of time actually looking at Amazon, looking at streaming services. It's just made me want to watch old movies, but we always watch the markets first.
Yeah, of course we do, Francine. Of course, there are those idiosyncratic stories, but broadly speaking, I would say inflation fears seem to be easing in markets really across the world. That was evident in the Asian session, where most stocks were higher, including in Japan and Hong Kong. But Chinese stocks are actually the ones that really outperformed, with the CSI 300 rallying more than 3%. And that was really driven by consumer stocks, the likes of Qichao Mutai, the liquor giant, which rallied 6% on the day. And it wasn't just stocks that were rallying. The Chinese currency was as well, reaching its strongest against the dollar since June of 2018, so almost 3 years. Of course, this is as China is trying to crack down on that commodity rally. That may be easing inflation fears a bit, and I would note iron ore futures in the Asian session essentially unchanged. As for what the picture looks like here in the U.S., we saw strong rallies yesterday led by big tech. And once again, that seems to be the case this morning. NASDAQ 100 futures outperforming up about 0.5%. Of course, that is, again, as inflation fears ease. And we can see that evident in the bond market as well, with the 10-year yield moving lower by about a basis point. But we are sub 160, actually at 1.5876% at the moment. It is a broadly weaker dollar story this morning. And then, of course, we can't avoid talking about Bitcoin, even if you might be tired of it, Matt Miller. Elon Musk once again wielding his power over the cryptocurrency, saying he talked to some Bitcoin miners in North America yesterday, potentially promising. That saw Bitcoin rally up toward $39,000, but we're coming off that level now, trading at 38,200 or so. Matt, what are you watching in Europe?
If I'm tired of it, then everyone must be tired of it, right? Because I have been obsessed with cryptocurrencies for the past 10 years, but I'm just sick of watching this volatility, hearing Elon Musk tweet about it, moving the markets around, and then people talk about Dogecoin as if it were a serious thing. So it gets to me a little bit. Here you can see European markets are up pretty much across the board. We see gains in Europe, France, and the UK, little changed right now, but you see big green areas there in the Iberian Peninsula, as well as especially here in Germany. Take a look at the stock 600. You can see gains there, as well as gains in the currencies. The euro is a gainer today. The pound, look at this, 141.90. A little earlier I checked, it was well over 142, and if it closes at that level, it'll be the highest that it's closed since April of 2018. So dollar weakness really showing through against European and British currencies. I guess we can't call British currencies European currencies. there is the big mover in Germany at the bottom of your screen. You can see Deutsche Wohnen up 16% right now. Vonovia is down almost 5%, has been down more after they made an offer for Deutsche Wohnen at $23 billion. Now, this is a big deal, Francine, not only because it's the biggest real estate M&A deal ever here in Europe, but because prices in Germany are already incredibly high. So it's a social issue here. You know, it's no secret that I was looking for places in Bronxville, in Greenwich, hoping to move back to Westchester. My wife nixed that very quickly. But main reason is that I want to buy a house that's cheaper than here in Berlin. Prices here for big houses are more than they cost in the tri-state area. So this is why this real estate takeover is such a big deal.
But there's so much to unpack, Matt. First of all, yeah, affordable housing. The fact that you're over Bitcoin is also probably, this is like peak. This is like peak Bitcoin. But we have to look at NFTs because, okay, Ether, good one. We'll talk about Ether. And did you see the NFT with, Charlie Bit My Finger that sold yesterday for about £500,000?
Unbelievable.
NFT,
Truly
the new
unbelievable.
Bitcoin. Now, a look at what else is ahead today. And in 1 hour, Bloomberg's Stephanie Flanders has an exclusive conversation with the German finance minister, Olaf Scholz, who's running for chancellor in the upcoming German elections. So Matt will also be all over this. We'll look at polling. We'll look at what happens actually in the next German election, which is slated for September. 7:30 a.m. New York time, the Bank of Japan hosts a panel discussion on policy changes and challenges. Speakers include the ECB chief economist Philip Lane and the Riksbank governor Stefan Ingves. Another central bank event, a Fed vice chair for supervision, Randall Quarles, gives his testimony before the U.S. Senate Banking Committee. And finally, it's 1 year since the murder of George Floyd, and President Joe Biden is set today as a deadline to overhaul U.S. policing practices. So, of course, we need to we'll stay on it and see why it's taken so long for something to be achieved. Now, EU leaders are planning broad economic sanctions against Belarus after it forced a Ryanair flight to land in Minsk. Belarusian authorities arrested a dissident journalist and his partner on the ground in what Ursula von der Leyen called an attack on democracy. Well, Bloomberg's Maria Tadeo joins us out of Brussels. Maria, with the extra sanctions on Belarus, without the support of the White House, will they actually make much of a difference?
Well, Francine, the Europeans believe they will, because on the one hand, if you move away from just shutting the airspace, the in and out flights out of Belarus, and you focus on the financial, this is now going after individuals who may be close to Lukashenko, financing that regime, and it's also going after the state companies, which is where Europeans believe really the money is at to finance and keep Lukashenko in power. So they do believe that this is going to exert pressure on Belarus and is going to further isolate the government of Belarus. In terms of the United States, the Europeans did believe that this was something that they have to decide for themselves. This was not an issue for the United States to intervene, because it was very much about the European airspace. It was very much about ensuring the European safety, but it was also about sending a message of power, force from the European Union when it comes to Belarus and by extension Russia, that the EU is ready to take measures when it's attacked.
All right, Maria, thanks very much. Maria Tadeo continuing to cover that. I think she's covering it 24 hours a day. I saw her sending messages around midnight last night. So good morning to you. Meanwhile, sources are telling Bloomberg that Amazon is poised to announce its acquisition of the MGM movie studio as soon as today. The expected price tag there, almost $9 billion. And it's not just the price tag. Obviously, it's such a widely held stock. We all want to know what's going on at Amazon. Let's get more from Bloomberg's Danny Berger. Danny?
Matt, I mean, look, this is so fascinating. You have this company that's really the epitome of the modern company buying a film studio that was founded in the silent era. So it's really these two worlds coming together. And part of what Amazon is doing here, really the largest part of what Amazon is likely hoping for, is that it can beef up its Prime offering. Of course, we have the ongoing streaming wars. But if you put this in the context of its other large deal, which was buying Whole Foods, that's going to be the biggest deal that they've done. This would be the second biggest deal should it go through. It just shows how they're really trying to keep customers coming to Prime and adding new customers in as well. So, of course, this means people are going to get access to the Bond film franchise, RoboCop, if that's what people are interested in, but really here concentrating on having more proprietary content after That's definitely what people are interested in. It's what I'm interested in. But, you know, they've already also put their bid in for Thursday night football as well from the NFL. So this is just more that Amazon is trying to do and trying to add to its Prime services.
Yeah, waiting for the day I can watch my Denver Broncos on Amazon streaming. Bloomberg's Danny Berger, thank you so much. Now let's turn to Bitcoin. It has trimmed some of its gains after a rally caused once again by Elon Musk's tweets. The Tesla founder signaled support for initiatives to make Bitcoin miners more environmentally friendly. But it wasn't just Musk. The cryptocurrency has also gotten a boost from Bridgewater Associates founder Ray Dalio.
I think Bitcoin's greatest risk is its success. The more we create savings in it, the more you might say, I'd rather have Bitcoin than a bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk.
Bloomberg's Joanna Ossinger tracks every move in the crypto space, and she joins us now. Joanna, does tracking every move in the crypto space also mean you have to very closely monitor Elon Musk's Twitter account?
It does, actually. So I was watching the tweets about Dogecoin offering dogs and memes today, for instance. But yes, Elon is once again at it. He just wants to, he says he wants Bitcoin to be more environmentally friendly. So he met with this group of North American miners. And he did say when he became disenchanted with Bitcoin because of the energy usage, that there was an opening. He wanted to see if they could be better for the environment. This looks like they're on track to do it. Some of the miners, of course, it's some North American miners, it's not all, and many miners are in China and other places as well. But it looks like it might be a start toward miners trying to account for their energy usage and adding in some more renewables.
All right, Bloomberg cross-asset reporter and Asia crypto czar, Joanna Ossinger, thank you so much. Now, I do want to take a quick check on some stocks moving in pre-market trading here in the U.S. One of the big outperformers to the upside is actually Tellurian, which, of course, is an LNG company. Shares are up about 3.6% after it was raised to a buy at DNB Markets. The analyst put a $4.40 price target on the stock. It's trading at $2.86 this morning. Not moving to the upside, though, is Lordstown Motors, ticker RIDE. It reported after the bell last night, and it cut its production target basically in half for its pickups. It also said it's going to need more capital to execute on its goals. As a result, the shares plunging more than 16%. And also moving to the downside is Virgin Galactic, Richard Branson's space company. It rallied 28% yesterday after a successful space flight over the weekend, but coming a bit more back to earth this morning with shares down about 3% before the bell, Francine.
Yeah, we have so much to look at. Also keeping an eye on football, actually, with some pretty cryptic Cristiano Ronaldo posts. I know Matt Miller will be all over that. Now, coming up next, we talk markets with Mark Hafele, Chief Investment Officer at UBS Global Wealth Management. And then a little bit later in Belarus, we'll talk to the prize-winning historian Anne Applebaum of Johns Hopkins. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London, Kaylee Lyons in New York. Now, I have a pretty incredible chart that Hillary put together for us, my erstwhile producer there. Because of our next guest's notes, it prompted me to look in to the yield on S&P 500 stocks. And I'll just walk our radio listeners through this. If you take out inflation, the yield on S&P 500 stocks has dropped below zero and has set a 40-year low. So we're looking at, well, I can't believe I'm so far over 40, the lowest since the early 80s. It's just pretty incredible. Mark Heffla joins us now, Chief Investment Officer at UBS Global Wealth Management. Mark, your notes prompted me to look at this. Still, S&P 500 stocks are yielding more than 10-year treasuries, of course, because inflation-adjusted yields there are even lower. But doesn't it concern you a little bit that we've gotten to this level?
Well, look, I mean, I think that there are risks in the market, and the fact that we're 20% above where we were before the pandemic does have a lot of our clients wanting to pause here. But I think we see some positive signs. One is what you just described in the fancy term, right, is the equity risk premium. And that still looks attractive compared to the alternatives like treasuries. And second, don't forget the monster earnings season that we're having. We're expecting S&P earnings to increase by 40% this year. And finally, many people still don't believe in the reflation that we're going to get out of this pandemic, and we do.
What is the one, Mark, so what kind of inflation expectations are you actually seeing? Is the market mispricing what we'll see?
Well, we think that in our central case that we're actually going to have peak inflation around now, and it's going to start to fall back again. But, even if you get a little more inflation pressure, I think that plays into our theme that you want to stay in the stocks, but more the stocks that are positioned for reflation, such as energy, financials, and materials.
You remain positive on the outlook for global equities, but if inflation surprises and we have a lot more volatility, how bumpy will it be ahead, Mark?
How bumpy is always difficult to predict, but I think if you think about a path towards that higher inflation and those fears persisting, this is still an environment where we have seen equities remain strong. Particularly, I think the momentum over the past 6 months is going to lead a lot of the quant funds. Some of the things we're seeing in our quant work is to continue that pressure towards the value, towards the sectors away from kind of the mega cap tech. So I think under the indexes, that rotation would continue even if the volatility picked up.
Inside of that rotation, Mark, what still looks cheap?
Well, yes, cheap is a relative word, but I think that this energy trade, the materials, the smaller caps all trade at much better valuations. I mean, we think that S&P 500 is at about 17.5 times forward 2022 earnings, whereas big cap tech is more like in the 27 times. So while that's not in and of itself, without looking at bond yields and reflation, not necessarily cheap, I think the valuation disparity means that a lot of people need to rotate because they just have too much tech still.
And Mark, in an environment where inflation may be peaking, what's your best hedge? Can Bitcoin serve that role?
Well, we're not at the stage where we think Bitcoin is a great place in most people's asset allocations. And I think, one of the things you all just said was you got to track every move in crypto, including people's tweets. And for most people, that's probably not the best use of their time. There's much better things they could be doing with their asset allocation.
We did see Mark Dalio say he'd rather own Bitcoin than bonds, which surprised me, I have to say, although I talked to a millennial friend this weekend who said he was drinking beers in the park here in Berlin listening to a Ray Dalio podcast. So I guess he's become part of pop culture, Ray has. What do you think about that position, rather owning Bitcoin than bonds?
Well, I listened to that clip, and I think what I got out of it's interesting. Everybody gets a different thing in this world today from the clips they see. But what I heard him say is that it could be a victim of its own success in the fact that if you get a significant rotation, one of the few things that China and the United States agree on is that crypto assets are potentially a threat to their monetary systems, international payments. And now we've added this concern about the environment, something we've had for a long time. And so, especially in the post-COVID world, if you are becoming an increasingly large asset that is not satisfying broader social goals, I don't think that is a recipe for more stability. I think it's a recipe for less stability.
Mark, thanks so much. As always, Mark Hafele, their Chief Investment Officer at UBS Global Wealth Management. Now, we're just getting some breaking news out of Benjamin Netanyahu, talking about Iran, but also talking about Hamas, saying if Hamas breaks the calm, the response will be very powerful. That feels like a threat. We also see Anthony Blinken talking, flanked, of course, by Mr. Netanyahu. The Israeli Prime Minister is commenting after a meeting with the U.S. Secretary of State. So we'll see whether the tone of voice coming from Mr. Blinken is supportive of what we just heard from Mr. Netanyahu, also saying that the Iran deal is paving the way for Iran to have nuclear weapons. Now, coming up, Bloomberg's Stephanie Flanders will be speaking exclusively to the German Finance Minister Olaf Scholz, who's running for Chancellor in the upcoming German elections. So you don't want to miss that. It's at 6 a.m. in New York, 11 a.m. in London, on Live Go on the Bloomberg terminal. We'll have plenty of analysis of what the Greens are doing at the moment and who potentially the next Chancellor of Germany will be. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news, and U.S. Senator Elizabeth Warren is proposing to nearly triple the IRS's budget to help identify wealthy individuals cheating on their taxes. Now, the Democrat senator wants the IRS to get a mandatory, stable annual budget of $31.5 billion and remove the agency from the annual Congress appropriations approval process. The Treasury Department says added enforcement could capture an additional $700 billion in tax dollars. Now, the entire world has been battling the same virus for over a year, but the quality of life and control of the pathogen spread looks vastly different depending on where you are. There's a shakeup at the top of Bloomberg's COVID resilience ranking, with last month's #1 Singapore falling in May, along with other Asian economies. In contrast, the U.S. and parts of Europe have been steadily climbing up the ranking as the pandemic slowly recedes and vaccination numbers climb. Now, the UK jumps 7 spots to 11th. The U.S. is number 13. New Zealand actually taking the top spots. Now, coming up next, we look at markets. We talk Bitcoin, treasuries, and equities with Valentin van Neuvenhuizen. He's NN Investment Partners Chief Investment Officer. This is Bloomberg.
more traffic.
Okay.
During the pandemic, no traffic at all.
Okay. Where do you see the oil market in about 20 years or so?
Non-existent.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, early edition of Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, there's quite a lot going on in the markets, Matt. I know you're dying to talk about Bitcoin. We've been talking about it day in, day out. Maybe we could move it to Ether or NFTs. Ronaldo is what I'm watching with Juventus and rumors. He actually tweeted a very cryptic tweet saying that he, it's not the records that he's chasing. The records chase him, but he could be done at Juventus. Speculation, but one of the big stories.
I don't chase records, records chase me. I love that quote. It's almost like a Chuck Norris thing. Maria Tadeo, who is actually our Ronaldo expert, she's a Ronaldo super fan, says very few teams can actually afford him because eyebrow waxing has become so expensive here in Europe that he needs a really high, like multi-100 million euro salary. I'm also watching Bitcoin. I just get tired of the Musk tweets driving. And to be honest, for me, under 40,000 is a little bit depressing. I bought my first Bitcoin for $600. So under 40,000 seems like I've made almost no returns on that.
Yeah, if only you remembered your password. I feel like if Bitcoin was a person, they would have probably tweeted what Ronaldo tweeted. But we digress. Kaylee, what are you seeing on the markets?
Oh, I'm chasing the markets. Not sure if the market's chasing me, though, Francine. We are on an up day on both sides of the Atlantic right now. Stocks in Europe are higher by about 0.4%. And, of course, it was big tech that led the way in the U.S. yesterday. Looks like it will be the case come the opening bell in about 4 hours' time today as well, with NASDAQ 100 futures up about 0.5%. Of course, this is as inflation fears seem to be coming out of the market a bit, and we are seeing yields moving lower by a basis point. We are sub 1.59% on the U.S. 10-year Treasury yield. And I know, Matt, I'm sorry, I know you're tired of talking about it. Bitcoin is sub 40,000 right now at $38,000, though still higher than it was yesterday before Elon Musk tweeted about his meeting with some of those miners. Now, as for what that's doing to cryptocurrency-tied stocks and pre-market trading, it's a bit mixed. Coinbase is higher by the better part of 2%, but Riot Blockchain, which is a miner, is lower by about 1.5%. Of course, Square is tied to the Bitcoin story as well, but it may be moving more on the fact that it's potentially planning checking and savings accounts that may enable it to compete with the likes of JP Morgan. So that stock is higher by 1% in early hours. And then, of course, the ARK Innovation ETF, Cathie Wood's flagship fund, is the poster child for tech and the momentum trade. And with the gains we are seeing in big tech broadly this morning, Matt, it is higher by about 1.2% before the bell.
I know they were buying Bitcoin. Indeed. I also know that Musk had a meeting with Saylor as well as the people at Hut 8 about mining in a more sustainable way. I think it's very interesting how many people own Bitcoin. You know, millennials, 20% of millennials hold some crypto assets, 15% of Gen Z. So maybe as you get younger, it gets less interesting. I am looking at outflows of Bitcoin. I've always been following this ETP, exchange traded product at CoinShares. It allows you to buy Bitcoin and then they hold it for you. So you can't lose your password as some people have done. Outflows, right now we're in the 7th month. It's pretty amazing, although the people at CoinShares say they think this is holders taking profits after they've made more than 1,000% return. So they've done well, but the point is they're getting out of this ETP, this exchange traded product. And to me, Fran, that says a lot.
It does say a lot. Now, joining us to talk about this and more is Valentin van Neuvenhuizen. He's Chief Investment Officer at NN Investment Partners. Valentin, thank you, as always, for joining us on Bloomberg Surveillance. When you look at some of the talk about crypto, so you believe it's here to stay, but in what form?
Well, I think that's the question we're all actually asking, right? It's here to stay. Technology-wise, as an integral part of our global payment system, blockchain will be there, and cryptocurrencies and other crypto applications through tokens, through other stable coins attached to, maybe traditional currencies, other assets, regular equities, new types of asset classes. Think about carbon, for example. There's all kinds of options that we're sort of still inventing here. So, it's good to see the still ongoing enthusiasm on your side on the topic, given that we've just gone through quite a massive shakeout there. So. And I think there was one other point that you quickly discussed, which is the involvement of the younger generations. And I think there's been also in this COVID period, the sort of a rise of a new participants in financial markets, and not only in crypto space, but also in equities and other parts of more traditional financial markets who've really stepped in, younger investors, and are really eager to explore.
Yeah, if you look at equity markets, for example, Valentin, is there anything that looks frothy? So we've heard, Janet Yellen, but also other central banks saying that they worry about these kind of valuations. What part of the market would you worry about?
Well, of course they worry about valuations. We've heard that so many times. I think that on its own is not a reason to become negative. On the other hand, it is a point that we are also now weighing a bit more heavily. We've been overweighting equities globally for the last 6 months or so, and we've just this week neutralized that position. So I do think that, although I'm not worried that there is massive bubbles in the whole asset class, that we're seeing a pattern now sort of peaking out in May. It seems a bit more difficult to see real catalysts for equities in the near term to push them dramatically higher. And valuations are stretched. There's no other way to put it. But of course, they have found confirmation in the earnings numbers. But you could also see there that markets had basically already bought that rumor and now, to some extent, are selling the fact in May. So I think they are, I wouldn't say frothy, but they are rich in valuations. So maybe looking at it from a bit more of a neutral stance for now is the best way. But underneath, I think we shouldn't underestimate the power of the recovery that is still coming. Go ahead.
Where do valuations make sense right now? I mean, commodities have been off the hook, and that's really been a weight on the mega caps. I saw a great chart earlier showing, commodities going like this, pushing mega tech stocks down. But Mark Heffla from UBS earlier, he likes financials, he likes energy, and he says this reflation trade still gives those room to run.
Yeah, I do think, ever since basically Joe Biden got elected, or the first election results came out in early November, this trade has been put up in the market. I do think there is an element there of the more cyclical sectors that you refer to that has further to run. As I was saying, there's massive pent-up demand, I think, in domestic demand in all parts of the developed world that will be unleashed over the next, let's say, 6 to 12 months, supporting those more traditional cyclical elements in the market. So I do think there's maybe a bit more upside on these sectors, but it doesn't take away the fact that the secular growth area is still in technology. And whether that is linking it to Bitcoin, any other of the new fintech technologies and payment systems, or whether it's just linking it to its better positioning also around this other critical theme, which is sustainability. I think that's where, in the medium to long term, really the growth opportunities still are.
In the near term, though, it does seem to be this reflation narrative, at least in the equity market. But what about in the bond market? Yeah. We have been stuck in this range on the 10-year Treasury yield for some time now. When and why will we see a breakout of that?
Well, it's a good point, and it's maybe also why now in the equity market in recent days, for example, the market is wondering a little bit whether this reflation trade is continuing. U.S. Treasuries have been peaking out clearly and sort of range trading in a 1.5 to 1.7 range for some time. You did see some further increase in European yields, so it's not completely gone away. They sort of drift up in yields and build up in inflation expectations. But for now, I think it's it's sort of peaking out. So we're reflecting a little bit. But I think if you look at the actual numbers, the inflation numbers that are still likely to come out, there's a lot of uncertainty. We might see a couple of other upside surprises there. So I don't think we're really at the end there. And therefore, I wouldn't be surprised if we move up a bit further, getting German yields closer to positive territory and getting US yields a bit up. But I do think we've seen most of the sell-off in Treasury markets.
Valentin, thank you so much. We'll have to get you back on to look at Treasuries. Valentin van Nieuwenhuizen, their Chief Investment Officer at NN Investment Partners. Now, coming up next, the EU vowing more penalties for Belarus. We'll speak with an expert on post-communist Europe. She's Anne Applebaum, Johns Hopkins Senior Fellow. That's coming up next, and this is Bloomberg.
What has happened here, this is unseen. It's an international scandal.
I think hijacking the plane and behaving like that, it is the act of terror.
The European Council decided that there will be additional sanctions on individuals that are involved in the hijacking, but this time also on businesses and economic entities that are financing this regime.
Particularly also against companies, so therefore we need more economic sanctions and entities supporting the regime.
We need clear actions in order to change the pattern of behavior of this very dangerous regime.
EU leaders are vowing sanctions against Belarus after the country forced a plane landing to arrest a dissident journalist. Now, we're back with, of course, this important story. And Anne Applebaum in The Atlantic writes, authoritarian states in pursuit of their enemies no longer feel the need to respect passports, borders, diplomatic customs, or now the rules of air traffic control. In autocratic capitals all over the world, dictators and their flunkies are also watching to see how the West reacts
and whether perhaps this new tool of oppression will become available to them too. Well, Anne is Senior Fellow at Johns Hopkins School of Advanced International Studies, Pulitzer Prize-winning historian who's written extensively about the development of civil society in Central and Eastern Europe, and we're delighted to be joined by Anne right now. And first of all, it's incredible when you look at, the events in the last 3 days, but also in the last 5 years. It seems that big democracies cannot or will not shape the world order anymore. Do presidents and leaders like Lukashenko just feel like they face no peril at all?
I don't know, it's that they feel that they face no peril, but they look at and they see a democratic world that's divided. Under President Trump, the United States was only a kind of half-hearted member of that world. It no longer saw itself as a leader of the democracies. Trump himself preferred the company of oligarchs and dictators, and he made that fairly clear. He didn't like going to meetings of democratic leaders, and the Democratic camp feels ragged around the edges. And I think that has allowed not just the Belarusians, but the Russians, the Chinese, the Saudis, and others to try things that would have been considered impossible a few years ago, poisoning people in London or in Salisbury, attacking and murdering a Saudi dissident in a consulate in Turkey. These are new kind of breaking new ways of oligarchs, of autocrats reaching their dissidents and exiles that we wouldn't have imagined some years ago.
And is the West response to Belarus strong enough? Or actually, as long as Russia supports Lukashenko, will it have little to no effect?
It's true that another aspect of the new world order, or the emerging world order, is that while the democracies are divided, the autocracies stick together, and they've proven that they're willing to come to the aid of one another when they're experiencing sanctions or pressure from the West. Belarus is a special situation because it's not a country that has a huge amount of clout outside of, away from Russia, and it doesn't even have a huge amount of clout inside Russia. It's becoming very dependent on Russia, having had a relatively successful, relatively strong economic growth over the last couple of decades. It's now in a real crisis. And there is a question about how long Russia will prop it up. And there are, of course, other economic interests inside Belarus. And the question is how long Belarusian businesses will continue to support a dictator who is increasingly really only interested in his personal survival. He doesn't seem to care much about the country. He's not interested in the welfare of his citizens. And he's not interested in the business community either, as this hijacking demonstrates. I mean, you don't force a plane out of the sky, a commercial airliner, and not expect any consequences, and he must have expected them.
And I get a lot of messages from, I would guess, the right wing in America who say the weakness of Biden is seen by, for example, immigrants who no longer have concerns with coming up through the Mexico-U.S. border, or Hamas that has no reasons no concerns about lobbing rockets back into Israel, or this kind of move. Now, you mentioned a few issues that we saw by autocrats, by dictators during the Trump administration as well, but do you see the administration change affecting what autocrats think they can and cannot do?
I think it's really too early to make any definitive comment about this administration. It hasn't made any gestures yet that are significant in this direction. Most of what we're watching now is still the backwash from the Trump administration, which was, I really can't emphasize this enough, played a really important role in undermining the unity of the Democratic camp, such as it still is. The European-American relationship, the relationship between America and Asian democracies, all of that is still being felt. And of course, around the world, most democracies even are still curious and wondering about the United States. Will it return to a leadership role? Can it? How long will this, how long will a Democratic presidency last? So I think it's early to say. I mean, the Biden administration has said that it would like to reconsolidate democracy and would like to work together with allies to push back against autocracies. It's true that we haven't seen much in that direction yet, but I hope we will.
Can the West really face Putin if Berlin is willing to funnel billions and billions of euros directly to Russia through the Nord Stream 2 pipeline? I mean, can you really sanction, a dictator as you fund his activities?
Well, I would separate two things. I would separate Belarus and Russia. Yes, I do think that Western action can have an impact on Belarus. Russia is much more difficult. It's a much bigger country. And as you say, it has interests all over Europe as well as the United States. And that's a very good question. There are sanctions on Russia, but do the sanctions matter? Can they hurt? If we still have extensive business dealings with Russia, not only through the pipeline, but through money laundering operations, banking operations, and all kinds of other ways in which Western economies are codependent on Russia. And yes, I think a stepping back, a looking at the way in which we are complicit in keeping dictators like Putin in power would be a really useful project, and it's one I do hope the Biden administration undertakes.
If the Lukashenko-Putin relationship grows a bit closer out of this episode, is the opposition in Belarus weakened or strengthened?
The opposition in Belarus, whom I have spoken to, very much want these sanctions. They want Lukashenko to be isolated. They're hoping that both pressure from Russia, but also from within the country, will help ease Lukashenko out of power. But yes, I mean, your point is something that is a danger. Lukashenko is increasingly entirely dependent on Russia. He's grown closer and closer to the Putin regime. Of course, that also makes his personal position weaker in some ways. If Putin changes his mind about Lukashenko, and they haven't been, sort of mutual admirers of one another in the past. They've fallen out over many issues before. And if Putin now removes his support, that would be the end of Lukashenko.
Anne Applebaum, thank you so much, of course, of Johns Hopkins. And you should read everything that Anne writes on the subject. Also on Twitter. Now, coming up, Deutsche Bank's nightmare decade is gone but not forgotten. We'll chart the firm's fall from grace and its impressive turnaround. It's our big take. It's coming up next, and this is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has has you covered.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Good Tuesday morning. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, deemed once the sick man of European finance, Deutsche Bank's days of dysfunction have finally retreated under the leadership of CEO Christian Sewing. Deutsche Bank's annual general meeting is Thursday, and Sewing is expected to highlight the turnaround at Germany's largest lender. We've taken a closer look at the recent changes at Deutsche and today's big take on the Bloomberg terminal and website. If you're a subscriber, if you're a client, just type NI Big Take Go. Joining us now for more is Stephen Ahrens. He's covered Deutsche Bank for years for us out of Frankfurt. So what has Sewing done, Stephen, that has worked? He's had so many predecessors try and fail.
Yeah, that's really the big question that we're trying to answer. What's different this time? And one thing that is different now is that this infighting at the top of Deutsche Bank, which really blocked the banks for years, that has stopped. It's really aligned. And it does what the CEO says. He unveiled a new strategy 2 years ago and actually went to execute that. That was different previously, too. There were many CEOs who had big plans but failed to implement them properly. This has now happened. But, and this is important, too, Sewing has also been extremely lucky. The trading boom that's been going on, it's buoyed many investment banks, has been helping Deutsche Bank as well. And that's also a big difference to before, when Deutsche Bank was suffering from a lull in trading for many years.
I remember, Stephen, years ago, you'd speak to people in the corridor in Frankfurt and then be like, why would anyone actually want that job? I know, we ask ourselves, is this now a more normal bank? Normal is difficult to define, but is it actually definitely in a better footing, on the right path?
Yeah, definitely. I mean, the story my colleagues and I, we wrote shows just how different it is. It's the first story ever, it feels to me, that that's sort of a positive story about Deutsche Bank, if you will. And so we're trying to show there was a decade where Deutsche Bank was just seen as sort of the sick man in European finance, and that is not longer the case. It's still not a profitable bank. It still has a long way to go, but it's not the sick bank anymore, I think.
All right, no longer a basket case. Stephen, thanks so much. Bloomberg's Stephen Ahrens there. You can check out our Big Take story on Bloomberg.com or also on the terminal NI Big Take Go. It's a really good one, so go and check it out. Now, coming up, Bloomberg's Stephanie Flanders will be speaking exclusively to the German Finance Minister Olaf Scholz, who's running for Chancellor in the upcoming German election. So we'll have a full roundup of everything Germany in a couple of minutes. 6 a.m. in New York, 11 a.m. in London. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Had a bit of a melt up in the first half of the year, so we don't necessarily see another melt up happening.
Inflation could keep rising, it's already rising, but stay higher for longer.
It's really about the supply side of the economy that we don't have very much information at the moment.
The idea here is that the Fed is going to be behind the curve when they do start the tightening process.
I don't think those rates are going anywhere. I think the Fed has been very clear that they're not going to allow any part of the curve to really get away from them.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures up 14 on the S&P, up 1/3% on the NASDAQ. Tech stocks doing nicely over the last week or so. And here's a headline to start the program from the Morgan Stanley CEO, Mr. Gorman, saying that he sees the Fed raising interest rates in early 2022, Tom. That's not too far away.
No, center tendency, I call it 9 months away, which in Fed speak, folks, is 3 meetings, 4 meetings, where it becomes really front and center. It really sets up. Let me get the fancy chart up here, John, that we've got on the Bloomberg terminal. FOMC, go. You know it. You love it. How about September 22? How about November 3rd? The Gorman theory is front and center.
I always love this, Tom, because the chief executive comes out with one view, and then Ellen Zentner and Morgan Stanley's got to come out into the media on TV over the next couple of weeks to give us her view.
She's fly fishing, folks, over in continental Europe somewhere, and she's looking at her phone going, he said what?
Here we go. James Gorman and Morgan Stanley, Lisa, speaking at the Nikkei Financial Conference in Japan, said that the Fed would begin tapering towards the end of this year. That's not too controversial. A rate hike in early 22, that would be a surprise for many.
Yeah, actually, one thing, just to front run myself, we're looking at a 2-year auction today of Treasuries. I was looking at the fact that you've basically seen a flatlining in the actual yield that you're earning on 2 years. Basically, nobody is pricing in the Fed moving away from their near zero rate policies for the foreseeable future.
Let's stop the show. Lisa, I want you to inform people like me who could care less about auctions. What information do you get from them?
You get a sense of who's in the market bidding. You get a sense of how much the dealers are positioned for to take down and how much investors really are interested in coming in, and whether they are indirect investors, whether they are foreign investors, whether they're direct investors. You get a sense of the demand dynamics. By the way, Tom, I'm never going to unhear. FOMC, you know it, you love it. John, please help us get back on rails.
I do totally love it. Your 5-year auction comes tomorrow, Tom, if you're interested in that. And a 7-year auction coming a little bit later in the week, too. Here's the price action. It's Tuesday morning. Good morning to you.
Belly of the curve.
That's right, Tom. The belly of the curve. Yields up by not even a basis point. We're down by a basis point. A break of 160. 159.10 on a US 10-year. A break of 160 to the downside. We'll touch on that a little bit more, a little bit later in your equity market. Through 4,200 on the S&P, up 15 or 16 points, Tom, up about 0.4%. And a euro, I've got to say, euro stronger, dollar weaker. Some dollar weakness in the mix today, 122.53, Tom, on euro dollar.
It is different, John, than yesterday. I want to make clear. Yesterday was a market struggle. Equities were up. Everything else was a snooze fest. And, John, today is a lot more informative.
A Monday snooze fest, Tuesday more informative.
It's true.
Oh, TK,
not every day can be lights out, you know?
Equities were having a really nice day yesterday. You call that a snooze fest?
Okay. Do you guys want to find out what's going to be today that's going to be more informative and not a snooze fest? 10 a.m., we're going to get a slew of economic data, including U.S. new home sales for the month of April. Basically, sales numbers have gone down as prices have gone up. Just to give you a sense, the median home price in the United States has risen 19% year over year. I mean, just to give you a dramatic sense of the climb that we've seen here, and that is the most in records going back to 1999. Also, May consumer confidence. Check out here expectations for inflation. That is what I want to know. Then also at 10 a.m., Fed Vice Chair of Supervision Randy Quarles is presenting to the Senate Finance Committee, Senate Banking Committee rather. I am very curious to see how much he raises concerns about financial stability, about pockets of froth. One thing I've been noticing is the Federal Reserve has been less willing to talk about froth in markets than other central banks globally, which point to the U.S. as a center of said froth. Kind of an interesting dynamic that is emerging. And then at 1 p.m., you know it, you love it, Tom. U.S. is selling $60 billion of two-year notes, setting off a slew of auctions. Tomorrow, as John was mentioning, we've got the 5-year auction. And then on Thursday, about $60 billion of 7-year notes. Dun, dun, dun. This is the auction that always creates trouble. And yes, I like to get a sense, John, of who comes in to bid, who wants to buy, because it gives me a sense of where the marginal demand may come from going forward for treasuries.
I'm with you. I'd like to do the same thing, and most people in fixed income do as well. The chart of the 2-year yield, Lisa, as you alluded to at the top of the program, has not had a heartbeat for a long, long time.
Yes. I mean, that's the thing. And no one's expecting the Fed to raise rates anytime soon, except for evidently Morgan Stanley's chief executive officer.
I'm so pleased James Gorman spoke this morning, because I had nothing to say 5 minutes ago. The Morgan Stanley CEO seeing the Fed raising rates in early 2022, speaking at the Nikkei Financial Conference over in Japan. Gilles Moek joins us now, AXA Group chief economist. Gilles, if you'll indulge me and start there, a rate hike in early 22. Any pushback there, Gilles?
Yeah, quite a pushback, because it would be really detrimental to what the Fed is trying to do here in terms of credibility. I mean, you cannot really push the story of average inflation targeting, pushing the idea that you will tolerate inflation and forth, and then have a rate hike as soon as 2022. For this to happen, you would need to see a complete change of view at the FOMC, a sense that inflation is completely out of control, possibly the risk that financial stability issues would really take precedence over what they're trying to achieve on the inflation side. So everything's possible in this world, obviously, but it would certainly be a big shock. It would take a lot, I think, for the FOMC to accept basically failure on the average inflation targeting strategy so early in the process.
Gilles Moek, you've always strapped academic economics over to market economics, and some of that comes back to the Greenspanian invention of a measured central bank. Do you presume that any central bank, and particularly Mr. Gorman's Fed, can be measured in 2022?
They're going to be under massive pressure potentially, because one state of the world I constantly think is what happens if inflation is actually in control, consumer price inflation is in control in 2022, which is our baseline actually, but at the same time you have very, very strong prices, a strong increase in debt, in leveraging. Pressure will be immense on the FOMC to kind of shift focus, disregard what's going on the inflation side, and go into a hiking process. But again, that would go against the sense of stability, of predictability that the Fed wants to put in place. Yeah. So it's going to be challenging, but the cost to the Fed's credibility in changing tack so soon, I think, trumps a lot of other considerations.
Gilles, is it just me, or does it seem like the ECB and other central banks around the world, including, frankly, the PBOC, have raised concerns about froth in U.S. markets? And the Federal Reserve has been incredibly sanguine about said froth. Can you talk a little bit about what you make of this dynamic?
Actually, it gets me back to my old days in public service. I used to work for the French Central Bank, and I was there at the time of the big global imbalance story. At the time, 2004, 2005, everything was about the U.S. running their economy red hot, Greenspan, not wanting to run a tough enough monetary policy, and everyone else in the world at the ECB, was clearly the case, was saying, you're playing with fire here. You should actually try to stop this asset price bubble before it's too late. Actually, we got it wrong in the sense that what triggered the shock in 2008 was actually not asset prices. It was at least not financial asset prices. It was housing, but foreign central banks will always say that about the Fed. You are playing with fire. You disregard financial stability issues. And my guess is that, again, we need to pay attention to the fact that there is this big disconnect between a U.S. economy, which is doing really, really well, ahead of most other developed economies, And when you are in this situation, you will always have the same dialogue. The Fed is going to say, the reason, for instance, why our current account deficit is rising is because you guys are not doing enough to prop up your own economy. It's not because we are inflating our economy. And the others will say, look, you are creating some danger here with what you're doing with reflating the economy, because this could actually trigger an increase in long-term interest yields for everyone, including Europe. So I guess the problem right now in Europe is the sense that, as usual, even if the Fed is super sanguine, is super benign on inflation, long-term interest yields have increased in the US, and there is some contagion to Europe. And it's coming at the wrong time for us. We're not as advanced as the US on our exit from the pandemic crisis. So, it's no wonder if we are a bit critical.
Starting to see that in the Italian bond market a little bit more over the last month too. Gilles, we've got to leave it there. Gilles Moak there, the AXA Group chief economist. Here's the headline from James Gorman, the Morgan Stanley CEO. He sees the Fed raising rates in early 2022. Now, there's two ways of looking at this, Tom. Either you can disagree with the Fed's forecast, that's one thing, or you can disagree with the framework and the new reaction function, and you can question that and whether the Fed capitulates. They're two different views, though. It's not clear to me whether the Morgan Stanley CEO is saying, I disagree with the forecast, the reaction function doesn't change, but the forecast, the price pressure is going to be there through 22 in a way that isn't transitory, which pushes them to move. And that's the thing, Ken. I think it is key. You can disagree with the Fed, but how you disagree with them, I think, is important. Are you disagreeing with their forecasts, or are you questioning their new reaction function?
Well, the reaction function is a key thing, and the key thing, John, is it's plural. It's not one single reaction function. There's a number of things going on here, the fiscal dynamic, the monetary dynamic. And I, again, as I've said for days and days, I would look at the real economy dynamic. I'm sure that's one part of what Mr. Gorman's looking at. And the tea leaves will tell, John, and one of those tea leaves this morning, John, let's frame right now on euro as we nudge towards a 123. Anything above a 123 is a big deal.
We saw north of 123 earlier this year. I think January 6th was the high. And if you look at a chart of euro dollar right now, Tom, it looks like a V. Year to date, euro dollar dropping. We saw the dollar dominance, the Q1 US exceptionalism story, and Q2. That story, Lisa, is starting to change. It's going the other way.
Well, and this is what I was going to say. Where is the pressure for the Fed to change their reaction function? You're not seeing a materially stronger, or frankly, the weaker dollar isn't material for the country. And meanwhile, you're seeing longer-term inflation expectations come down at
But it can
points,
come
John.
from the data. You can still disagree with the forecasts. And the Fed themselves have said, if inflation continues to overshoot in a way that we don't anticipate, then we'll make a move.
But it'll take longer than just the next couple of months. That's my sense.
Totally. And I think that's going to be a story for the end of the year.
Correct.
We'll find out whether it's transitory or not, and they'll have to draw some conclusions from that. Coming up at 7 a.m. Eastern Time, we'll be catching up with Anna Han of Wells Fargo. We'll do that in about 45 minutes. Your equity market with a lift up a third of 1% on the S&P. Yields lower. A break of 160 on a 10-year, 158.93. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The entire world has been battling the same virus for over a year, but the quality of life and control of the pathogen spread look vastly different depending on where you are. There's a shakeup at the top of Bloomberg's COVID resilience ranking, with last month's #1 Singapore falling in May along with other Asian economies. In contrast, the US and parts of Europe have been steadily climbing up the ranking as the pandemic slowly recedes and vaccination numbers climb. The UK jumped 7 spots to 11th and the US is number 13. New Zealand took the top spot. U.S. Secretary of State Antony Blinken landed in Israel this morning on a Middle East mission aimed at shoring up the recent ceasefire between Israel and Hamas. Blinken is meeting with Israeli Prime Minister Benjamin Netanyahu and other top Israeli officials in Jerusalem, and will then head to the West Bank city of Ramallah to speak with Palestinian Authority President Mahmoud Abbas. Deutsche Bank is moving about a quarter of its corporate bank's UK staff to offices in the European Union and Asia. Bloomberg has learned about 100 jobs will be moved in an attempt to reduce costs in pricey locations like London and put staff closer to the clients they serve The bank says some London-based employees can reapply for their jobs in the new locations, but they will be required to take a pay cut. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We do have to strongly condemn the actions of the government of Belarus. What they did on Sunday, intercepting a commercial civil aircraft, clearly put the passengers and crew of that aircraft at risk, and forcing them to divert is unacceptable behavior by any government.
The story of the last week from New York City this morning. Good morning. Alongside Tom Keene, Lisa Brambitz, I'm Jonathan Ferro. Is the Tuesday morning price action. Equities, the bounce continues on the S&P 500, up around about 1/4%, positive 11 points. On the Nasdaq 100, up 65. We advance 0.5%. Yields breaking down through 160 at 158.76. We're down a little more than a basis point now. And the euro breaking out, the dollar weaker, cable in and around 142. That's the pound against the US dollar. Euro dollar, Tom, 122.57.
Yeah, everything on the screen, the euro gets my attention most. John, I'd also note the real yield backs up. It's not a big deal. It's midway in range, but a negative 0.88 is not where we were yesterday, is it?
Worth keeping an eye on, Tom. Another thing to keep an eye on, an interview going on with the German finance minister and our esteemed editor, Stephanie Flanders. That's taking place right now. The German finance minister, Olaf Scholz, saying we're really, really angry about the action by Belarus. And then a question on the commercial relationship between Germany and Russia. And the German finance minister going on to say the Nord Stream 2 project is a private project that is almost complete. And that's where there's some real tension now between Germany and the allies, including the United States, Tom, and the relationship, the ongoing commercial relationship with Russia.
Well, it is, and it's the layers of sanctions and the level that any given society wants to go to. Martin Schenker joins us now, Bloomberg editor-at-large in charge of all sanctions study, including, Marty, our Ute, where you and I saw sanctions work in South Africa. Everybody said they wouldn't work, and boy, did they work with a vengeance. Different story, different time and place. I walked in this morning, and Guy Johnson taught me to look at FlightAware, and there was FedEx flight. Let me get it up here on the screen. I just lost it looking at the 2-year auction coming up this afternoon. It was FedEx flight 5030, China to Germany, flying over Belarus. Is FedEx doing their part?
Well, the question is, does FedEx have an alternative? I mean, if it's FedEx, it's obviously a cargo flight. There are no passengers involved. There's been no formal ban on flying over Belarus at this point, even though there are people calling for that kind of sanction. But it seems unlikely they're going to be able to enforce that.
It seems like a lot of our audience is saying, look, you can fix this. You just got to put some will in place. With your reading, do you see, in our reporting, I should say, does the will focus just on Belarus, or are we going to have to pull Moscow into it as well?
Well, I think that, they want to avoid pulling Moscow into it. And in fact, we do have some reporting around what's happening in Moscow that Putin specifically wants to distance himself from this action, even though the foreign ministry sort of backed it. So it's a little unclear just how coordinated this thing was.
Marty, how much does this complicate President Biden's summit with Putin?
Well, it adds another layer of complication for sure, Lisa, because, the world has a way of imposing its agenda on world leaders, and this seemingly rogue action is going to force Joe Biden to confront Vladimir Putin on his involvement in this.
How much consensus is there, Marty, among Congress members about the approach that the U.S. should be taking with respect to these discussions with Vladimir Putin, especially given some of the dissonance between Biden's perspective and former President Trump?
Well, I think there is relatively bipartisan feeling in Congress between Democrats and Republicans that Vladimir Putin needs to be confronted on these issues, not just on what's happening in Belarus, but even going back to election interference and other things that Russia has refused to acknowledge.
Marty, let me rip up the script. It's that time of year where Congress types go home.
Right.
What do they actually do when they go home? With your years and decades of experience, what do they actually do when they go home?
They fundraise. To be quite honest, they do hold some interactions with their constituents, but most of the time they're meeting with donors and making sure that their campaign finances are in order.
Are they told what to do? Does it ever change the dialogue in Washington that they go home and so-called listen to constituents? I don't buy it for a minute.
There are rare occasions where the public mood is so great that it might in fact cause them to change stance, but most of the time it makes no difference.
Right now we're waiting for Republicans to come back with some sort of counterproposal to the $1.7 trillion reduced bill that President Biden has put out there. Do we have a sense of the contours of what that counterproposal might look like?
Well, they have, the Republicans who are negotiating on this bipartisan bill have said the $1.7 trillion has things in it that are simply not infrastructure, and there's just no way they're going to go there. So it's going to be an interesting dynamic to see if Joe Biden is willing to compromise in the hope of getting a bipartisan deal on infrastructure.
Marty, just quickly, do you think there's a clock ticking here on these talks?
Yeah, I think they are. I mean, he wanted to get this done before July 4th, and it's looking less likely that they're going to be able to do that.
Marty Schenker, our Bloomberg editor-at-large. And Tom, that clock continues to tick. We caught up with Emily Wilkins yesterday, and I think she nailed it to some degree, Tom. Looking through to the midterms next year, it's not about getting this done before the midterms. It's about getting it done and making sure it's already executed before the midterms next year so that people actually see it, feel it, experience what comes out the other side of this bill, and not just looking at a bill and an agreement in isolation.
In isolation, I'm going to go, nothing's changed, John. The other side doesn't want the other side to get credit for any kind of legislation. I mean, it's just simple as
and
that.
And defining the scope of infrastructure, as Marty said a million times. Tom, that's still a question that we haven't agreed on the answer of.
Well, we haven't agreed on infrastructure. We haven't repaired the bridges in, I'm going to say, 30 years. I mean, this is not a new thing. It's been going on for decades.
And Lisa, many people expect it to go on for a few more years, maybe.
Exactly.
Yeah, although this is all coming at a time when we're still dealing with the disparities from the pandemic that were exacerbated by the pandemic. And the Biden administration wants to address them and wants to convince people that this is part of the economic dynamism of the United States, that bringing people up and being more equal is actually an economic case. And the question is, where is the data and how they're going to sell that to a highly skeptical Congress?
Well, we have a fundamental philosophical disagreement on one thing at the moment, don't we? What is infrastructure? That has been the story now for the last several months, and that seems to be a hurdle that they can't get over.
No, and this is part of the issue because the infrastructure spending plan doesn't have that much in terms of traditional infrastructure. That said, can they broaden infrastructure beyond roads and bridges to, for example, more energy efficient projects and things like that? I mean, aside from some of the social projects, how much are they willing to cave on both sides, John?
Coming up on this, Marvin Lowe, State Street Senior Global Macro Strategist, that and more on this market too. As we break out in the equity market the last couple of days, your S&P 500 up 12, we advance a third of 1%. The NASDAQ up 65, call it 66 points higher on the NASDAQ 100, up about a half of 1%. Yields coming in this morning by almost 2 basis points.
What does that mean, John? Yields in. What's it mean?
Tom, we talked about this the last couple of days. You just happened to ignore me over the last week.
Deflation?
We're waking
just the
up
past couple of days.
to the same story every single day. And when you get bored of the same story, you have to ask yourself how loaded the boat is to the one side. And I think Matt Hornback and Morgan Stanley did a nice job of pushing back against that. So many people are talking about the same thing. When everyone starts to zig, you have to think about whether you want to zag.
We had Matt
just started to come in. We had Matt on yesterday.
Oh, we did? Okay,
we
thank
did.
you.
Tom Keene, Lisa Bramage, Jonathan Ferro. Nothing changes.
Attention's transitory.
This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In New York for our audience worldwide. This is Bloomberg Surveillance. Your equity market shaping up as follows. That bounce continues on the S&P 500 up 11 or 12 points. We advance 1/3 of 1%. On the Nasdaq up about 1/2 of 1% after a really big gain on the Nasdaq 100 yesterday. The gains continue. Switch at the board and get to the bond market. 2s, 10s and 30s. Your yield curve shaping up as follows. Your 10-year over the last 1 year. I keep doing this, don't I? Break of 160 on a 10-year at 159.10. We'll be talking about the 2-year a little bit later. Lisa going through the supply, the bond auction coming later on today, 5-year tomorrow, 7-year coming up on Thursday. Your 2-year has not had a heartbeat for much of the last 12 months since the Fed dropped interest rates. When the likes of Morgan Stanley's James Gorman makes a call like interest rates are going to start rising in early 2022, you've got to start thinking about why. This is what the Fed essentially offers: a set of forecasts and then a reaction function. In plain English, this is where we think the data will be, and this is how we'll describe how we'll react to said data. So if you're going to disagree with the Fed, are you going to disagree with the forecast, the data, or are you going to disagree with how you think they'll react to that data? I think the bar for the latter is higher than the bar for the former. You can disagree with the data. Do you really want to disagree with the reaction function? That implies you know what they are thinking or what they will think in the future. That's a different ball game. That's the bond market right now. In the FX market, shaping up as follows for euro dollar. We do have a chart of that. Euro dollar. What I like about this chart is that euro dollar, for all the talk of the dollar bearishness at the start of the year, euro dollar came all the way down to 117, and euro dollar bottomed when 10-year yields peaked. That was almost the peak of US exceptionalism versus the rest of the world. And then we started to change. Euro dollar getting back out to 122.53 this morning. The high of the year was 123 on January 6th. Tom, we're not too far off, and I think you've said repeatedly that when we start to inch towards those kind of levels, expect some noise from the ECB.
Before we get to Marvin Lowe, John, this is so important, we got to frame it. We framed this 6 months, 8 months ago as a 130, 128 angst for Europe. That's changed.
Well, I've heard 125 over at Deutsche.
Yeah.
I've heard 125 over at Goldman. I have no idea what the ECB can actually do about it, Tom, even if they do start to talk it down. I actually think their biggest concern right now is not through the FX channel. It's what starts to happen in Italy on the periphery, and yields have been bubbling up just a little bit over the last month.
Now, the only reaction function I'm looking at is who the next coach will be for the Tots. It's steaming, it's percolating.
You think Pochettino comes back from PSG, Tom?
I do,
Maybe.
but I can't pronounce his name. What can I say? Right now, let's go to Marvin Lowe. He is with State Street, their senior global macro strategist, always writing really cogent notes linking Fed policy into the markets. Marvin, I want to go from Mr. Gorman and Morgan Stanley gaming out 2022 to the chairman with the weight of the world on his shoulders to what it means for the equity market. I want you to explain to our radio and TV audience what this Fed babble means for stocks.
You know what? It's as simple as how much liquidity and how ultimately dovish the Fed makes it for the market. With negative real yields, you've got a repressive financial system, and equities benefit from the fact that there aren't that many alternatives. If you're buying a treasury security at this point, you're buying into the view that you're going to lose money after inflation, ultimately. In terms of how you parse the Fed, in terms of whether or not they're correct that inflation will be transitory, is the key that all of us are asking right now.
Yeah, I think this is so important, John. And for our radio audience, we've really got to state that we go from Gorman to Powell, and then the jargon is DJIA, John. Right? I did that for you. That's the Dow Jones.
Thank you.
Industrial Average.
Marvin, when you responded to that question, you weren't talking about a shift in the Fed's reaction function. You were talking about the data may be coming in hotter than they anticipate. Do you think that's the lower bar here, to disagree with their forecast, to say that actually it will look a little different in the future to the way they anticipate?
Yeah, I mean, I think the real challenge is that the Fed is giving us a message that it hasn't believed in the forecast in the past. That's why they've become outcomes based. But everything is based on their view that data is going to be transitory. So from one instance, believe us